How's everyone doing today? Put up what we're looking at. He said on semi is probably going to drill at 10%. No, they shouldn't. I actually bought some more shares this morning. Oh, wow. I didn't realize I took this extra leg down. Yeah, I bought some more shares. Obviously didn't work out. Hey, shut up, FinDivvy. That's my filter, right? Hey, Blizzard, how you doing, my friend? Yeah, wow. Getting smashed around now. Not seemingly big volume, though, so I'm not worried yet. On Semi's earnings, I thought were pretty good. I thought they were pretty good. But we'll talk about that more later. I have not read the full transcript yet. That's what I'm waiting for. So I'll probably judge them tonight after stream. But this is not too uncommon, by the way, to what happened last earnings. And after that, they just promptly went up. Yeah. They're at a price not seen since what, last week? Yeah. So still an exceptionally strong. They had a strong earnings. Yep. Half port, no. Hey, Steely, how you doing, my friend? Yeah, look at this. Look at all the red. Oracle just keeps going up. It's kind of impressive. It really is impressive. Yeah, I think we're all waiting until FOMC, which is weird because we don't really have, like, I don't know. I mean, what do we expect FOMC to prove? It's weird. What I find most intriguing is right now, let's chat for a second. Everybody knows over the weekend, Nick Timros, Timmy Leaks, put out another piece basically saying consumer and corporate balance sheets are strong, that if you actually want to see Fed interest rate hikes do damage, they, quote, may have to go higher for longer. So it's the idea of increasing the terminal rate. Basically floating an extra 25 basis points, which would be what? Between 475 and 5. Remember, interest rates are always expressed as a range. We always talk about one number, and yet it's always a range, right? Well, what I find interesting about this, let me show you this. All right. Is that at least for the start of next year, we've already priced in a terminal rate between 475 and 5. So the funny thing is the Nick Timros article actually gave more credence, believe it or not, to the market once again that fights the Fed, the FFR market, actually being right. Presuming that piece came from the Fed, by the way, which it's hard not to argue they weren't potentially aware of it at least. But it also lends credence to the previous like dot plots indicating that could be the case. So believe it or not, it's not actually a surprise. It just kind of it kind of goes back against what I had said previously, meaning I was wrong. It happens that I thought the Fed was getting, or the market was getting way more aggressive than the Fed. Now it's like, no, if you believe this to be the case, then it's fine. Actually, the Fed's now agreeing to the market. But yeah, I think we're all in a waiting pattern until FOMC, which is, again, going to be weird. It's all about the commentary. 75 basis points is what we're getting this month. I'll go one step further. If you see a substantially, like, for example, if the Fed didn't raise rates at all, I think the market would die. Just absolutely die. I think the market wants to believe the Fed is taking inflation seriously, and it's hard given the inflation data we've had to say we shouldn't get a rate hike. We've already priced them in. Yeah. Do it. Please. I'm going to use the expression I used it this weekend in the Discord. What the market really wants is a responsible dominatrix. Okay, dominatrix. We want someone wearing leather who's going to kick our ass, who's going to kick inflation's ass, but's not going to kill us in the process. Basically, we want a well-established safe word, and we want the trust in the partner to comply with the safe word, right? That's what we're all looking for. We all want to be dominated by the Fed. We want them to raise interest rates. We know that's the case. What's the safe word? Probably Carvana. Yeah, just a little hurt on the balls. I think is great. All right. Yeah, just not the safe word from Euro. Exactly. That's what I think the market's looking for. It really is. So if the Fed all of a sudden didn't raise rates, oh my God, I assume the market would die. And mainly because the fear would be, okay, something broke. Something on the economic side broke. Now downside really comes into play. So I actually think the piece put out this weekend saying that higher terminal rates probably doesn't change market expectations. We'll see going into the FOMC what happens, because the FOMC could very easily, in fact, I'm almost betting it's a sell the news event. Your safe word is Oracle. No shit. Oracle's just doing well. Oracle's the good cloud case. The Donald says, Weed plays getting some action today on rumors getting close to a bill passing. Is it even rumors at this point? I thought it was basically stated by one of the members in the Senate, one of the Democrats in the Senate. But yeah, Straight Perfection got an Intel ad on the stream. Oh shit, that's not good. We can't have that happening now. Yeah, so market right now not very happy. On semis really not happy. By the way, I thought their earnings were excellent. Maybe they're just obeying their channel. Who knows? Who knows? I bought a few more shares just to lower my cost basis. I'm comfortable. If we're gonna do channel reading on this one, do we think they either hit the 200-day or do we think they hit the bottom of the channel? I don't know. I thought their earnings were fantastic. There's complaints that their guide's a little bit light. If that's what a light guide looks like, given the rest of not only the semiconductor sector, but companies in general, I'll fucking take it. They have a notoriously conservative management team. And given their strategy is to basically offload parts of themselves, I mean, shit, they're selling a fab of theirs. News broke early this morning. No one talked about it. They're selling one of their fabs in Japan. They're moving to an asset light model. So, yeah. Hey, you're new at this. Was there a meeting why that quick drop in the SPY? Yes, there was news. News that Biden's going to float a windfall tax against oil companies, which is just fucking stupid. C.Dude asks, who's buying the fab? Some Japanese company. I don't know. It's obviously it's a very old fab. So, hey, Blizzard, how you doing? Thank you for the sub. 12 months. It always shocks me. Yeah, Chem Life. So bullish oil. Yeah, it's politics, guys. It's politics. No fucking way. First of all, taxation cannot be done through executive order. That's been well established. It has to go through Congress. He does not have the support. He doesn't have the support for the Democrats to pull that off. And later on, I'll talk a lot more about oil. I'm very into like renewables. I'm into just more energy in general. I hate the idea of a windfall tax. I absolutely hate the idea of a windfall tax. Oil, if you know the oil industry as a commodity industry, they have booms and busts. The idea behind the booms is that they make enough money to pay back their investors, to invest in their business, to get them through to the next bust. Nothing's changed. I know ExxonMobil posted record profits. Good for them. It's a commodity. Just like I push back for people who say, oh, Biden should talk nicer to the oil companies and maybe they'll build out more investment. No, I think that response is incredibly naive. And just like I think even talking about a windfall tax, that having that do anything, particularly in the short term, that's also naive. It will not work. I've not seen the transcript yet. You think life is fair? There are 14,000 people watching Amaranth. Hey, supply and demand. She supplies it, they demand it. I respect it. Yeah, we want more supply. Taxes will make that happen. Biden, like I said, I don't think they're going to pass it. I'm with Steely Hands. This is something to campaign on. It's something to run on. The fact that this is the week before midterms, that's fine. I think it's stupid policy. I assume it's not happening. So that's what I would sit there and say. I don't treat it serious. It's not. It should not be considered. So I just wish Biden wouldn't do it. Hey, Soren Kiwi, any noteworthy moves? I bought some IWM this morning. It was showing a lot more relative strength. IWM is probably where I play for the next few weeks in general. I think small caps have a much sexier valuation compared to particularly the mega caps. Plus, what generally speaking is not an IWM, it's oil and big tech. The two areas I think that are kind of volatile right now. So I like IWM to outperform the SPY and the Qs. It keeps me essentially out of big energy. It keeps me out of big mega cap. And I think that's a little bit more comfortable. I don't know if it's a smart play or not. But I'm not making a lot of big moves until after FOMC. With one exception. No, Twitch streams have not gone over on semi. I'll wait. I'll do that probably at 1:30. There is one exception on the earnings side, and someone's already asked about my viewpoint on it. All right. Someone's already asked. Thanks for WinBB. We're going to talk about it. Scheme yellow. You're dead on. We're going to talk about it. Look at the earnings, guys. Now, FOMC is released Wednesday. One of the most interesting companies that's reporting this week is AMD. AMD. I'm very interested, and I'll be honest, I'm really tempted to just play calls. I'm really tempted. Here's the thing about AMD. I'm going to bring up Intel. I know. We always talk about AMD in the context of Intel and Intel in the context of AMD, and it's fair because AMD is fucking bodying them. I mean, they are bodying them. So, we showed this slide last week. All right? We showed this slide. I'm going to bring it back. Here's my case for AMD. All right? Raw Mexico, hold that thought. You're not wrong. Now, Intel basically said they lost 27% on the revenue side year over year in data center and AI. All right? They lost 27%. AMD has already pre-released. I think on the data center side, they were up 35%, up 30% year over year. So at the same time Intel is going down, AMD went up. Not only that, Intel had to push back Sapphire Rapids. The expectation is it doesn't ship until the end of Q1 next year, if they even make that deadline. All right. This is actually a really interesting piece here. I will encourage you guys to read it because holy shit. This author, I respect this author going in on Intel. This author correctly points out Intel actually has a bit of a Facebook problem in terms of spend. Patty G needs to get some shit under control. We'd heard stories about, there's a term in semiconductors called tape outs. It basically, if you ever work in like finance or like just basically any corporate role, you know how you have those like presentations or Excel files, you have like V1, V2, V3, final V1, final V2. Think tape outs like that, okay? And it basically means when you make significant changes to chip architecture, things that would impact the production of a photo mask, and those are expensive. Intel is at something like 12 or 13 different tape outs for Sapphire Rapids, which means they have found significant issues 12 or 13 times to the point that they have to spend millions and millions of dollars to create a new mask to then go through testing. Okay, it's part of what pushed them behind. It's part of why their margins turned to shit, because essentially this is cost of goods sold. Yeah, final revision, V10. Yeah, stock picking monkey knows the game. Yeah. So, let's take a look at everything we've learned so far. All right, AMD's pre-reported. They did fine on data center. The only reason AMD got their asses kicked was the PC market. And again, We know the PC market sucks. AMD already got punished. Micron's been punished. Western Digital's been punished. Seagate's been punished. Microsoft got punished. No one is fucking shocked by this. Instead, AMD says data center grew. They have a new product being basically released next week, or at least being previewed next week at a big investors event. We'll probably watch it. All right. Intel says they're down 27%. It's forecasting weakness in data center. And they had to push back their own data center product through a whole bunch of operational stuff. Now, let me add one more element to this. All right. Last week, all the mega caps reported. Here was commentary. So Apple, CFO. So when you look at our CapEx, as you correctly said, I mean, we've been fairly stable. And I think our capital intensity is really very good. We have 3 major buckets in CapEx for the company. We have certain dedicated tools for the manufacturing facilities. We have some spend around data centers, and we have spend around our office facilities around the world. Meta's CEO, here we go. Our current surge in CapEx is largely due to building out our AI infrastructure, and we would expect CapEx to come down as a percent of revenue over the long term. All right? Their CapEx is data center. By the way, Reality Labs is not CapEx. It's technically R&D. Bit different. Microsoft CEO. In capital expenditures, we expect a sequential increase on a dollar basis with normal quarterly spend variability in the timing of our cloud infrastructure build-out. Google, CFO, the majority of CapEx does continue to be for our technical infrastructure. As we talked about on prior calls, servers really have been the largest driver of the investment dollars. Amazon, CFO. We had, again, doubling of the network, had very high CapEx the last 2 years. You'll see that we lowered CapEx year over year. We probably cut about 1/3 of our budget from what we originally thought for 2022, while still focusing our capital dollars really on the AWS business. None of them cut CapEx for next year, at least on the technical side. Amazon talked about reducing fulfillment and their retail side. Sure thing, Esrel. This was my tweet, by the way, on the topic. So, let's put it together. Intel takes a beating this last quarter in data center. At the same time, AMD hit their targets for data center. They showed growth, big growth. Intel basically guided down the next quarter on data center. They just happened to also had to push back a product that was supposed to originally be released next quarter out into the following quarter at the minimum. So they have failure of execution. AMD reports this week and is going to talk about their guidance. They've already pre-released. The only thing investors care about is the guide for AMD. And I will make the argument the only thing they really care about is the guide on data center. And the following week from now, AMD has an investors event where they're unveiling their next generation of EPYC data center server CPUs. And then finally, we have all of the mega cap that reported last week. Not one of them cut CapEx. In fact, Meta got their ass kicked because they increased CapEx. I like AMD going into earnings. The fact that Intel, look at this. Intel missed, guided down, horrible results. The only thing they said that worked in their favor was essentially that they were going to be doing layoffs. They were going to be focusing on costs. And they mooned 10%. Meanwhile, AMD, during the same time period, got a bit of a bump, but they have been just hammered. And they've been basically consolidating. So here's my question for you guys. From any crayon eaters, what the fuck are we to think here? What are we to think here? Is AMD really going to trade at a forward PE? They're saying 16. I saw a number that was closer to 15. But what do we think here? Keep in mind, AMD has a stock buyback. If AMD wanted to, they can institute a dividend right now, even on their worst looking quarter. That's what I think is crazy. AMD's earnings are Tuesday evening, so it's before FOMC. It's before FOMC. So I'm looking pretty carefully at AMD. I think AMD could be an interesting play. Mainly because you can paint the narrative that A, they show strength, they get benefits from that, they go up. B, they cut guidance in the future. All right, Intel did the same thing and went up 10%. AMD is trading at like historically below what a semiconductor down cycle looks like. So long calls will probably be how I play them. All right. Thank you for this one, MP Tosca. This is on Semi. We maintain our $74 fair value estimate for narrow moat on Semi after the firm reported strong third quarter results and provided cautious guidance, roughly in line with their expectations. Yeah, I've seen people say they guided down. I don't think they did. I think they actually guided in line. And this is a very, very cautious company, which is fine. Hail to the Kaiser. AMD is going to be shadowed by the Fed Wednesday. Exactly. That's the one issue I think we have. The good news is they report after market Tuesday, and Wednesday the Fed news comes out 2 o'clock. So you have time to theoretically jump out. It's a tough call though. This is not a layup. All right? It's not a layup, particularly because the PC market's still going to suck next quarter and the following quarter. You can go to Micro Center right now. There's so many deals. If you guys need a gaming PC, seriously, go to Micro Center, look at the deals they have. AMD has some you get free memory. They're giving you $50 off a fucking motherboard. The actual CPU is a lot cheaper. I'm not saying it's a guarantee. Anyway, back to OnSemi. Yep, we see shares as modestly undervalued and believe OnSemi is in a position of relative strength to weather a down cycle. Third quarter sales rate, 26% year over year, 5% sequentially, driven by continued strength in automotive and industrial end markets. OnSemi's revenue is increasingly supplied by applications like electric vehicles and renewable energy infrastructure, and these secular trends underpin our long-term growth thesis for the company. We expect demand to endure for these models, especially given OnSemi's focus with products like silicon carbide. Yep, sounds about right. Wendy, you bought a Logitech gaming mouse last night? Nice. I bet it was cheap. ChemLife might be nothing, but feels like extended depreciation schedules from the cloud companies is amplifying the data center capital cycle. Easy way to juice out better numbers by just adding the. That's the Microsoft argument. Microsoft switched their data center depreciation schedule, I think, from like 4 years to 6 years, something like that. And you're right, but there's also just like all the cloud companies are battling amongst each other, and they all need these upgrades. The big driver, this is fucked up to me. It's energy costs. It is energy costs. If you're running a data center, now you give a real shit about energy consumption. You always did before, but if you were running them in Europe, you care now. It's almost to a point where I'd love to see a buyer for like a Microsoft or a Google or a Facebook operating in Europe right now. And I want to hear them make any logical justification for Intel right now. Because AMD is about to release a new CPU for the data center, which price per watt is going to be a much better proposition than anything Intel's pushing out for essentially the next, 2 quarters, 6 months. Because Sapphire Rapids is the end of Q1, presuming they pull that off. Yeah. I would love to hear a good argument made as to why someone would pick. If you're at least what I'll call more the leading edge, say on data center. DK Bill, give me a few moments, and I'll eventually go back to it. I'll be honest, I don't know. The short version is I have no clue how to play Airbnb. I've heard 2 different sides. FinDivvy, AMD will look tempting at 35s. I don't think it ever gets there. For AMD to get to 35, I assume Samsung acquires them or tries to acquire them well before then. But given how much AMD earns in money, no, that wouldn't be. No. I mean, what would that be like compared to book value? Oh my god. Yeah, you're basically talking about them trading close to book value. For a company like AMD, no fucking way. They give money back to investors. They go private at that point. Yeah. Yeah, Augustus, I saw that. Best part, they're doing the Epic data center announcement on the same day as CPI. Yeah, they're really choosing some interesting time frames on this one. CPI is next Wednesday, isn't it? FinDivi, 2019, 35 was the normal price for AMD. 2019, AMD pulled about $6 billion, about $7 billion in revenue. They were $5 billion, over $5 billion in revenue this upcoming quarter they pre-released, which people were disappointed. There's no fucking way they go to 35. If that's the case, the entire market died before them. Because AMD will go private at that point. They'll be literally trading a bit above book value. So, like, yeah, I get it. The chart may have said that was the case. That was before they acquired Xilinx, and that's before they really execute on their strategy for data center, which gave them so much more revenue. Does that make sense? How long would it take for Meta to buy back the entire float? Well, if they save the money, they actually. Meta was buying back stock at over $300, and now they're under $100. People shit on Meta for blowing money on the metaverse. They blew a lot more money on buying back their stock. Ugh. Cole Bark says AMD is just leagues better than Intel right now. That's the story. That's honestly the story. AMD is kicking the absolute shit out of Intel in the data center. And this is something that Lisa Su intended. DK Bill, are we bullish on the market or bearish? I'm more bearish right now. I'm more cautious, shall we say. I'm more cautious. It's hard to be a full on bear when Mike Wilson comes out and gets very, dare we say, bullish? Mike Wilson going bullish is a big deal, guys, because he was a bear. Where is it? Let me pull up the tweet from. There's so much interesting shit, by the way, over the weekend. Yep, I like all the moves, by the way, in regards to what's it called? Fuck, slipped my mind. I'll think about it later. Kramer is wearing a bull mask. Oh god. Yeah, Windmaster. If you read, yeah, thank you. The Mike Wilson note. Mike Wilson from Morgan Stanley. He's very, very good. He's very balanced. He makes a good point. If you think inflation is a purely monetary phenomenon, which, by the way, I don't. I don't. I'm going to tell you right now, if you think money printing, the velocity of the M2 supply, is the fundamental driver behind inflation, then you also have to acknowledge inflation's peaked, which is really ballsy. I want to take a minute to pull up Apple's CFO. This is brilliant.
Is that for the other thing that I think is different is that for example we always believe that quality is more important than quantity, and so for example we run the company very lean. I tell my guys in finance, I don't want you guys to ever benchmark anybody else because you can only get bad ideas. We run the finances of Apple with about half the size of some of the companies that I worked for before. They were like a tenth the size of Apple, right? I have an investor relations group of two people. I have the group that manages $230 billion of cash is a group of 7. I know when I look at my counterparts in other large companies that got multiples of those resources, but we really believe that if we have the right people, we don't need a lot of them. And so I think that's a different way.
So I love hearing that call out because if you go back to last week, the bigger problem for the mega caps was not the idea, oh my God, they're shrinking revenue, stuff like that. They'll be fine. The problem was they had no discipline on cost containment. Yeah, Cole Barks, he is right. And it's just the idea of like Apple's a different breed. Apple has seen true down cycles. The last real down cycle, Google, Facebook, they were very young, smaller companies. They never really had to deal with it. Apple's dealt with this shit. Apple's over 30 years old. So it's real interesting to hear that perspective. We've not spoken about onsemi yet. We spoke very briefly, but we'll speak more. So I thought that was a really impressive piece. So that's Luca Maestri, the Italian-born CFO for Apple. And it's kind of an example of why, I mean, Apple's just a different beast compared to the other mega caps. It's boring. Apple should be looked at a higher tech version of like Procter & Gamble or Coca-Cola. They should not really be a true tech company. They should be a consumer staple. Honestly, they should be a consumer staple. By the way, I've sold out of Apple. I have no intention on holding positions in Apple. I will tell you right now, if Apple ends up taking any kind of huge beating in regards to the report that came out about the employees fleeing Foxconn and Genzo, I will play them for a short-term bounce. I do not fundamentally believe any significantly negative. I saw an article that said it could be up to 30% of their production of iPhones in jeopardy. Fade those fuckers. They do not know what they're talking about. Any true supplier of Apple which speaks to the media gets replaced. And yes, that would include Foxconn themselves. Never trust any reporting that comes, quote, directly from like a single Apple supplier or a second Apple supplier. All right? Trust Ming Chi Kuo. All right? That dude has his sources. He's never burned one of them, apparently. That dude is widely regarded as well. And if he ever misses on one of his predictions or one of his research notes, then it's a different ballgame. But he hasn't yet. Hey, Rad. You got the ape shares today. How are they doing today? Oh, they're being well behaved. Yeah, for anyone who missed it this morning, how is GME? Oh, man. Went up, halted. Wall Street bets went apeshit. Go figure. Complaining how come they always halted on the way up. Then it started going down, got halted again. At least it halted on the way down. Wow. Regarded in the good way. Yes, thank you, Daddy Logos. Yes. Highly regarded in the most positive fashion. Rad, they said GME over 30 was a guaranteed MOAS, but we got no ass. Was there any, like, driver of this? Was it just that fake Ortex data issue? I mean, we talked about it last week. There was no way there was that many shares on loan taken out when there was not that many shares traded. Like, we know that was a mistake. But was there any, like, real fucking catalyst here? Spencer, what's the ape news? Let me explain. It's the Jim Chanos play. Jim Chanos. Diogenes on Twitter. So, Spencer, here's the potential play. It's a bit of an arbitrage play. At some point, we know AMC needs cash. Now, AMC trades at $6.61 as of right now. Ape trades at $2.09. They have no authorization to issue AMC shares, i.e. the more expensive ones. They have the ability to issue more than 3 billion Ape shares. AMC needs the money. All right? AMC needs the money. They have over 5 billion in debt. They need fucking cash. If they're going to issue shares, they can issue Ape shares. The problem is Ape shares are significantly cheaper. The solution is this. There's now more Ape shares, apparently, in circulation than AMC. Ape shares are convertible. They're a preferred unit, but they are convertible to AMC shares. But it has to go through a shareholder vote. Most importantly, Ape holders can vote. So the second that Adam Aaron announces a vote, basically Ape becomes the equivalency of an AMC share. The AMC Apes get diluted immediately. And the better play at that point is to basically go long, short, long Ape, short AMC. It's a Jim Chanos play. This is not like me being smart. This is someone smarter. Rad, that's exactly what I'm thinking. The vote could be announced at the next earnings. And if that's the case, I would anticipate AMC gets smacked around a bit, but I would expect Ape goes up. Basically, at that point, the two securities should equal out. They should equal out to each other. Sagano, Ming says Apple won't be releasing any new computers this year. That's not a surprise. That's expected. That's expected. Apple, on their guidance, by the way, they outright acknowledged they do not expect Mac sales to be significant for the holiday season. They overperformed on Mac sales. Like literally, like no one was expecting. They showed 25% year-over-year growth in Mac sales. No one else sold more PCs than this same period last year, except Apple. It's impressive. But for the fourth quarter, for Apple, what's going to drive them is the iPhone and the iPad, plus the Apple Watch, plus AirPods. It's the holiday season. It's their strongest quarter. People keep saying, oh, they said, you know, they guided down. No, they fucking didn't. What they basically said is next quarter they expect year over year to be a little bit less than 8%. And that's perfectly fair because last year, their holiday season was like their best quarter in history. So yeah, they'll be fine. Mm-hmm. By the way, they're also supply constrained. They admitted that on the call, particularly in the Apple Watch, which I thought was kind of cool. But yeah, that's Apple. So yeah, the Fed reverse repo was up from 2.18 trillion. So okay, so an extra 100, you know. So basically, in the next few days, we should expect the market to go down if you buy into the liquidator or sorry, not the liquidator. Yeah, it's the liquidator, which I agree makes sense. You like how someone brought up the ape arbitrage on Graybish's sub soon after it was made, and people in the comments were like, "Shut the fuck up, you're not Graybeard." Yeah, I need to follow that sub a little more carefully. I have mod powers. I'd be happy to like. I'll troll. Fuck it. I'll be like, dude, shut up. Gray Bush. I assume he's talking about. You guys people just sold 90 billion? Sounds about right. Hey, Bruce Gold, how you doing? Spencer, yeah, I saw that. Liam Hemsworth set to replace Henry Cavill. Yeah, that's going to be so bad. So bad. 8. The graphics card drought probably helped Mac sales a bit. I don't know about that. I think there's different audiences for that. Apple basically said they attributed their outperformance with the Mac sales to back to school season, which I think makes perfect sense. Back to school sales sounds about right. Steely, off topic, but heads up. Satellite imagery confirmed a big grain ship convoy left Odessa today, despite Russia pulling out of the deal. Yeah, I'm pretty sure. I know a lot of people are playing like weak calls. I don't know if I'm playing it yet. If I was jumping in this one, puts. Rad, how are you missing the most important news? McRib is back. Yeah. Yeah, so I know a lot of people got, by the way, blown out on playing weak calls post invasion in the first place. Come on, IWM, go back up. with feeling. Cool. Any thoughts on upcoming Qualcomm earnings? I do not know what to think. There's an interesting post I saw earlier in regards to Qualcomm, specifically around Chinese smartphone inventories. See if I can pull it up. Well, I didn't read this morning. So Morgan Stanley, overweight both Qualcomm and AMD, cuts the prices on both. Qualcomm overweight due to report Wednesday. Trimming numbers reflects weakness in Android builds that remain overweight. Baseband and apps processors have generally seen minimized impact to end market weakness. The RF businesses have been seeing. Sounds about right. Yeah. Nosecester, does it make sense for Qualcomm to be down this much? Not this much. You can make the argument that every other semiconductor company went down, except for onsemi. You can make the argument, sure, that's fine. But down this much? No. Qualcomm's set to earn more money next year now. Even that research note put them at what, $13 for the entire year? That's a big boost to what Qualcomm was earning last year. Their two biggest customers are essentially Apple and Samsung. Apple for modems, Samsung for application processors. Samsung has basically already came out and said they're not going to be looking to replace Qualcomm until what, 2025? So Qualcomm's got another 2 years. And then Apple has at least another full year before they can look at replacing Qualcomm. So Qualcomm's supplying all their modems for the iPhone. Like, the automotive business is just a plus at this point. And any non Samsung related smartphone, which by the way, there's a bunch, particularly in Europe and China, there's a bunch. That's just additional upside. Apple's already shown, by the way, Apple only had 8 days worth of the new iPhone sales in that last quarter. And they did pretty good on iPhone sales. But you can tell a lot more, they'll do a lot better coming up when they get the full quarter of getting these new phones in. So I assume Qualcomm's going to be doing very well. Hey, even more caffeine. Thank you for the sub. Greatly appreciated. Ooh, thank you for the 100 bits. Dry Dog, I just spoke about AMD. I'm really tempted to play them. AMD, I it's all about the guide. They've already pre-released. What do they see in the data center? I think they're killing Intel a lot worse than people gave them credit for. Even if they guide down again on PC weakness, I think the market has well priced that in. And the fact that AMD has consolidated here, I mean, any crayon eaters, how do we interpret this? They pre-released. By the way, Intel had terrible earnings and rose 10%. I don't know if it's obvious. I've seen a lot of people like on Wall Street Bets talking about puts on AMD, and I'm like, they're dead. It could happen, don't get me wrong. I hope Wall Street Bets goes full on, like, basically I hope they treat AMD like Apple. The difference is you can make a logical argument about, well, what's the proper valuation for Apple, particularly against historical standpoints. AMD, ever since they started making money, has never been this cheap. Giving it a price target of 75. Okay. Ballsy. Cole Barks makes an interesting point. There is a really good post. I may try to find it later. Someone who works at Meta did a post, I believe, on like stocks or investing, answering someone else's question about Meta, and he pointed out like the shit they're working on is actually really cool. The problem is Mark Zuckerberg keeps wrapping it under this like meta, this metaverse guys. If he just focused on AR VR, they're working on cool shit. By the way, I will point out a long, long time ago, because I remember this, don't mock me for my age. Amazon got a lot of shit from their investors for this big gamble. Why doesn't Amazon stick with retail? Why are they getting into this new, expensive, high investment business? That expensive, high investment business is called AWS, which makes them the vast majority of their profit today. I'm not, on a long-term basis, gonna shit on Facebook for this, because the truth is, what's the long-term like success of a social network? I don't know. But the metaverse, or at least AR, VR, the operating system and entry point and platform for that, it could be interesting. Cole Barks, you need to watch the Marquis Brownlee video on Meta and open your eyes to how insane their augmented reality was. Yeah, I remember, I don't know if I've ever told this story. Back when I worked CPG, I got invited into this, like, we had was it Deloitte or Accenture? We had a partnership with one of the big consulting firms that basically had their office out in Silicon Valley, and they just focused on like entrepreneurs, startups, etc. in the technology space, like specifically retail ops, customer segmentation, data analytics, etc. And I remember we did this whole thing at this like lodge like for two or 3 days, and like I got to go along, and like it was like 30 of us there. I was the only person within the HR side allowed to go because I was in the tech space as well. And the stuff they showed was really cool. All of it's like years and years away, but it showed some of the technology, and part of it included like AR, VR, for like planograms. So be able to have like retail reps come in, and be able to like have it uploaded so that they can basically put on glasses and look at a shelf and know exactly where to put things. So it could speed up that process. It could also do like kind of checking at the end of it. So like just by looking at it, can say if it was good or not. So there was all sorts of like really cool technology. There were pieces about understanding like if people downloaded an app, which I thought was stupid. It could track your footprints throughout a store. There was other technology that just used cameras to do the same thing to basically build out like floor plans and understand like customer behaviors. It's really, really cool shit. Like none of it was anywhere close, but it kind of showed you some cool stuff. Bastille, Jay, my friend, you don't look a day older than 39. Well, thank you, my friend. Thoughts on PayPal and Airbnb puts? I don't know how to play Airbnb, guys. I do not know. I've heard arguments to be pro. All right, let's chat. What's the pro argument for Airbnb? It's called every fucking airline has done amazing. Every airline has done amazing. What's the con for Airbnb? Supposedly occupancies are down. Part of the problem with Airbnb is they're expensive. Those cleaning fees, etc. Very expensive. Now, here's the question I have. Like I said, I don't know how to play Airbnb. I would probably not play them. Here's the problem with Airbnb. The general state of the housing market. Do we see more houses not being sold? Do we see more houses going up for rent? Do we see, therefore, more houses being used on Airbnb? Does that bring down the cost? Remember, Airbnb doesn't have to make the money based on how expensive, like basically the price of staying at a place doesn't necessarily help Airbnb. Airbnb gets a cut of every booking. I don't know if it's by rate or whatnot. So the more units being listed, does that negatively hurt Airbnb or not? You more caffeine. There are 3 Airbnbs in your neighborhood, and you've not seen new cars in the driveways. Ouch. Service fee is a percent. Okay, thank you for that. Jordy Botto, elevator pitch on why I'm better than BitBoy Crypto. I have no clue who BitBoy Crypto is. I don't cover crypto because I am not smart enough to talk about something like that. I think I'm good at understanding business, corporate, accounting, finance, etc. That's why I am who I am, right? Yeah, more importantly, if there's something I don't know, I tell you guys. Plus, my audience is a lot smarter than I think any other, like most of the other Twitch streamer audiences. All right. Like you don't need me to talk to you about like coal or oil or retail. We have smarter people in here who can talk about that. That's my success. We care about tangible things. If crypto had tangibility, like if they had something on the valuation side, we talk about it. We would absolutely talk about it. Yeah, Cali Otter. We should have known Doge would pump. I know. Yeah. Spencer, hold on. Let me go back to what Spencer was saying. Yeah, Qualcomm is working on finishing a huge IoT project with Walmart that should launch nationwide next year. Basically, a new way of pricing that is much more efficient. Walmart's getting big into is trying to get big into, or sorry, Qualcomm's trying to get big into the AI processor space, so it's not too much of a shock. Plus, you'd have to have a lot of basebands, and Qualcomm getting in on that's their bread and butter. So I like Qualcomm. By the way, quickly on Qualcomm, let me show you. This is the same story as AMD, by the way. This is the same exact story as to AMD. Like, this stock is fucking cheap. I've not seen anyone downgrade. I've seen people cut their price. I've not seen a single downgrade on them. I've actually seen a downgrade just this morning on AMD. I'm yet to see anyone move their. Did anyone do it? Let's see. Hold on. Buy to hold and outperformed neutral. Okay, I'm wrong. Two of them. One was in July and one was in April. Yeah, so nothing recently. Yeah, the other thing, guys, is aren't the hotels all doing well? I mean, does that mean people are switching over from Airbnb into hotels? Uber or Sophie for earnings, just be careful playing puts on Uber. Uber's management's done a good job. They're focusing on free cash flow. They're focusing on EBITDA. I would be much more. I hate that entire sector. I would be much more likely to be long Uber than long DoorDash, Grubhub, or Lyft. I have done my best to help you over the past 8 years. Unfortunately, today I can't afford to be on social media and to fulfill my personal responsibilities. If you want me back every day, it can't be without your help. Thanks for your support. Oh, Walter Bloomberg. Good luck to him. ChemLife, the Airbnb cleaning fee has single-handedly pushed you back to hotels. Yeah, that makes sense. Yeah, and hotels don't ask you to start the washer on your way out. That's a good point. Yeah, and Pitaska, if I wanted some money-losing companies since inception, why not some better SaaS companies like Uber and Lyft? Is Uber still losing money? Put it this, is Uber still losing cash? They probably are. Yeah, long term, I don't like them, period. But I thought if you excluded stock based compensation, which is a different story altogether, I thought Uber was pretty close to being like free cash flow positive. Yeah, Uber probably makes a lot, or sorry, Airbnb probably makes a lot more sense overseas. People also forget that before the pandemic, cities were looking to ban Airbnbs. Yep. Airbnbs get substantially banned. It's going to be particularly interesting because any downturn in the housing market, if people are stuck holding on to their homes, they're getting fucked. LifeR asks, how long until the self-driving taxis? Oh, it's a while. It's a while away. I don't know exactly when. Put it this way, it's going to take longer than we expect for it to happen, and once it starts, it's going to take a lot less time than people expect to really take over. You remember I did well in the last earnings on Uber? Yes. I didn't do too bad on earnings last time. Give more caffeine. White House official. If the oil and gas industry fails to act, Biden will ask Congress to consider tax penalties and other restrictions. He gave it away. He gave away the game. Let's chat about the oil sector. Let's chat about the oil sector. Now, full disclosure, I have interned. I wasn't a full employee. I was an intern for ExxonMobil. I have a lot of positive opinions, specifically of ExxonMobil. It's weird because I'm very pro energy security. I'm also very pro renewables. I'm not one of those people who thinks we shouldn't try to incentivize moving away from setting carbon on fire. And really, that's the most important aspect. Stop burning carbon. It's the emissions that are the problem. This is my way of saying, even if we got everyone in electric vehicles and we stopped burning coal and we stopped burning oil, we stopped burning natural gas, there will always be a use for hydrocarbons, specifically oil, in our everyday lives. And we shouldn't run from that. All right? That being said, this is a very cyclical sector, okay? It's boom bust. It's boom bust. Exxon or any energy company has to make a lot of money in their up cycles to pay for all their investments and to handle all the losses they're going to take on their down cycle. That's, I think, part of the issue. Now, what's interesting is that taxation policy in the U.S. is clearly delineated through Congress. So Biden can't use an executive order. It has to go through Congress. I think there's zero chance he has the votes for it. And he even points it out. White House official, if the oil and gas industry fails to act, Biden will ask Congress to consider tax penalties and other restrictions. Second of all, who are you blaming for this? Most gas stations are mom and pops. ExxonMobil, I'm pretty sure, sold what's called CORS, C-O-R-S, company-operated retail stores. I don't think ExxonMobil owns a single fucking gas station anymore. All right? So it's stupid. I assume this is political maneuvering because there's zero chance it happens. Even if we weren't in essentially in a bit of a lame duck session pre-midterm elections, they wouldn't have the votes for it anyway. You think Manchin's going to support this? No. So I get why he's doing it. I assume he's using the bully pulpit, which Steelyhand said earlier. I 100% agree with that. I don't think it happens. And we need to stop demonizing the oil and gas industry. Okay? We need to stop demonizing them. At the same time, we need to appreciate some of the oil bulls are fucking assholes. Okay? All right? Just like I say that, we also need to acknowledge the reason that we haven't built a refinery in 20 years is not because a politician talked a bit mean to the oil and the gas industry. No, that's not the way it works. People don't make multi-billion investment decisions on the basis of this politician sounded mean to me. That's not the way the real world works. Just like I say, you can't demonize them. You shouldn't demonize politicians on the actual like campaign trail. It works both ways. Both ways. Yeah. I'm very much optimistic that in the future, particularly because of the Inflation Reduction Act, Manchin wanted carve-outs to allow more interstate natural gas pipelines. I think that's a good thing. I'm a big fan of pipelines. You want that pipe, particularly for natural gas. But also, quick reminder, the federal government is not the one who blocks most refineries. State and local governments do. Don't blame Biden for that one. Got it? Yes. Steely hands. You also don't understand the oil and gas dance. If progressives don't want us to exist, we'll just stop investing in our business. Yep. Not only that, there was a lot of points that were made, and I'm pretty sure it came from API of all people, American Petroleum Institute. They're the advocacy group, the lobbying group for the oil and gas industry, that showed shareholder returns are the number one consideration why they don't invest. The second any energy company, particularly what? Any of the the smaller ones, the independents, anytime they increase capex, they get fucking slaughtered in the market. Investors run. They don't want to see an increase in capacity. They want more capital returns. Let's acknowledge we're part of the problem. HP Vada, yeah, but consider it a counter strategy, Jay, you suppose. Oil lobby and the R's demonizing Biden for inflation and energy costs over nonsense, so turnabout is fair play. No. Let me tell you what I'm specifically saying. Politicians are going to do political things. I don't blame the system for that. I blame the audience for being stupid enough to fall for it. That's what I'm going to say. All right? ChemLife is exactly correct. Cyclical business. All right? No one gave a shit when the oil companies were losing money because gas and oil prices went negative. They are allowed to have their profits because they need to plow them in, they need to reinvest them. Let's not shit talk them for that. The audience is absurdly stupid. Yep, both sides. Both fucking sides. The second anyone tries to get nuanced on this topic, they're going to get slimed by either side, whichever one hates them the most that day. Us, though, we're an intelligent group of people. We don't have to fall for it. We can call both sides out. It's fair. Kimbo says, capacity is a reason why it's cyclical. I love that argument. Yes. Companies fear overcapacity, so everyone waiting for someone to pull the trigger. Yep. Yep, son, people are stupid. Real stupid. Yep. A person can be smart, but the second you start adding more and more persons to that room, they do stupid shit. I promise you. Yep. Count the guys are over 80% of Americans believe they're smarter than the average person. Yep. Us, though, we're highly regarded. The most regarded we can be. So, yeah. That's my way of saying, basically, do not shit on oil companies when they make money, and do not shit on politicians when they use oil companies. And by the way, I've seen a real interesting argument when people say, oh, Apple made too much money. Why don't we talk about windfall taxes on Apple? With all due respect, if you don't understand the difference between energy and Apple, then let me help this one out for you. When did we invade a country on the basis of access to Apple? Zero. When did we do that for access to oil? There's a difference. There's a legitimate difference. Stock Picking Monkey uses hate being hostage to oil companies that claim supply restricted when they are sitting on billions of barrels of unharvested oil. Keep in mind, I don't think oil fields can almost never be like fully harvested. There's a long time belief, by the way. Yeah, we're talking about the fruit, yes. There's a real interesting argument that a lot of the production figures that sit on balance sheet for the sisters was the expression for the mega oil companies, is actually unrecoverable, because essentially once you drain an oil field to a certain amount, the pressure goes down, and there's a certain percentage of the oil, you know it's there, you can't pull it out. The pressure's gone. Yeah. FinDivvy, I love that. You know, England doesn't have an Independence Day, but they're the reason everyone else does. Anya, thank you very much for the sub. Greatly appreciated. You're new to this, but oil is not indefinite. No. No, it's not, but oil will be around longer than human beings. By the way, to that point, I got into a debate over the weekend with someone. It was a very fun one, very interesting one. Tremendous amount of respect for him. But it's an interesting debate to have. And I will stand by it. Let's chat. Last topic on oil. ExxonMobil CEO said a stupid fucking thing on Friday. Many of you know what I'm talking about. He was right to view it that way and stupid to say it. His comment was about returning any profits to the American people. Will I do that through dividends to our shareholders? Was he wrong? No. Was he stupid to say it? Yes. He prolonged it in the cycle, in the news cycle, in the media cycle. If CEOs don't understand, part of their job is essentially PR. And I had someone sit there and say, well, I'm glad he said it. And I'm like, with all due respect, you're an existing investor. He already has you. But if you're trying to bring other people, here's how he should have answered it. We're already leading investment in the transition to clean energy, to carbon sequestration and carbon storage. We're doing everything we can right now to help bring down the price through efficiency and reduce emissions both today through efficiency and in the future through bridging to new technologies. Every fucking statement I said, by the way, is true. They do that. But no, he tried to be standoffish, and now he just guaranteed this gets to be a political issue in a midterm engagement cycle. This is the difference between being correct and still being stupid. Darren Woods, CEO of ExxonMobil, managed to do both. Got it? Give more caffeine. You see the point, but at the same time, he has to stand up for his company. No! No! He doesn't. He doesn't. Sunny says you give oil execs way too much credit. No! I don't. I remember Rex Tillerson. Rex Tillerson would have beat the absolute dog shit out of Darren Woods in the back room if he was in charge and he found out Darren Woods said a comment like that. Because literally it took the focus away from ExxonMobil having their greatest quarter, basically. Give me liquidity is correct. Bring shareholder value. Do you know who gets to be the cheerleader in tough times like that? American Enterprise Institute or API, American Petroleum Institute? Let other people push back. Yes. Fig, you love me. Like I said, I'm an evil centrist. I'm an evil centrist. Bastille, there's a difference in being stupidly intelligent and intelligently stupid Exxon CEO. Yeah. Kimbo, believe it or not, yeah, oil execs should talk about puppies, rainbows, flowers. If you need to talk about bad shit, API and AEI are there. Let Republicans, let politicians from oil-producing states, let them do it. Don't engage in it if you are the number one visible figure for your company. That's what I would say. Makes sense? Again, I don't think he's wrong. I just don't think he's the one that needs to be saying it. Yeah, use your lobbyists. That's why you have them. It's like when an athlete gets caught, like, you know, sticking their dick in a random secretary, and it's like they want to make a public statement, but there's like legal ramifications. Like, motherfucker, you don't have to say shit. Let your lawyers, let your PR people do it for you. No one wants to see you craft a statement in crayon and read off poorly. Let the people you pay do the job you pay them for. So yeah, and by the way, I take it as a moment of pride. So ChemLife, Prometheum, I have the best energy and commodity knowledgeable people in here because you guys bring knowledge, you're not afraid to share it, and quite frankly, you're not fucking crazy. And I respect the shit out of that. I love it. All right? I like having the different perspectives here. It's totally cool. Okay? I absolutely love it. You guys are so much more both knowledgeable and, I will say, balanced than if you go on Twitter and watch people freaking the fuck out right now. And I know you guys don't have to necessarily agree with me on everything. Trust me, that's I respect the shit out of that. That's cool. We all shouldn't think alike. But goddamn, oil bulls are a unique beast. Unique beast. And I'm sure I'd be saying the same shit, by the way, about like the growth boys. They all got melted down already. They don't show up very often. Yeah. Politician calling out, they're making more money than God. Exec sneaking out of the room. Yeah. Yeah, you feel that way about most commodity traders. The classic example is the craziest to me is the silver people. We've talked about this before. They believe their bull case is the world turning to absolute shit. Okay? What it takes for them money-wise to actually go up has a, like, to me, it's like, all right, fine. If that's the case, just buy guns and ammo and steal the silver from the other dumbasses. Extremists are extremists. That is a very true point, HB Votto, yeah. Windy, you dick. Nah, Grove's still not capitulated yet. Bring the pain. Stacking. Oh, they want the... They're going to pay a premium over spot. At your box are a lot of libertarian silver maxis. Bless their fucking hearts. Bless their hearts. All that shit will show up at a pawn shop. Hey, Vero, how you doing? How is Snowflake doing? You got someone telling you withdraw all money from the banks? Oh my god. Snowflake's at the bottom of the channel. I don't know how you crayon eaters want to interpret this. I don't know when their next earnings is. I think it's like the end of November. The interesting aspect behind Snowflake is if customers are looking to rationalize IT spend, you got to understand Snowflake is pay by consumption. This is a really easy spot to save money. So I almost think you got to be careful. Then again, valuation wise, I know their forward PE sucks. Their price to sales sucks. This is a very expensive company. This is an incredibly expensive company. The reason why they're expensive, this is a good company. Legitimately, this is a good company. You are basically paying for the idea that here is a company that is a platform agnostic, shall we say, place to store big data for analytic applications, which is a huge, huge growth space for companies. I remember for me to kind of get through my head how valuable this company was when I finally realized, wait, I don't have to use SAP's S4HANA. I can actually use Snowflake instead. And now I can migrate my data from, say, Google to, Microsoft Azure. Damn. MBTOS Snow, you believed IPO'd at a valuation of over 100 billion. Remember that? Still a great future. Yep. Too much growth priced in. Yep. Good question. I'm not sure if these numbers are to be believed, they don't have debt and they actually have a decent amount of cash. You more caffeine? I saw that last night, yeah, or at least this morning rather. The offshore yuan was dying. Out of my gourd, is snow day next week? Interesting. Keep more caffeine, all-time weakness. It's going to be really interesting. I wonder if I have to look more into that. Bring that up tomorrow or even tonight on Discord. We may chat about that. I have a sneaky suspicion that China wants to devalue their currency right before they essentially really boost production. China's local economic situation sucks. They need to boost shit. So devaluing their currency just makes them much more attractive as exporters. And inflation's not a problem for them right now. Shutdowns actually helped them. Hey, Whiskey Jack Black, how you doing? Macridis, how you doing, my friend? Windmaster. We value things on price to sales in this decade, sir, since money is free. Well, it's not free anymore, but yeah. Thoughts on the RBA cash rate? I don't think I'm smart enough. I don't even know what RBA is, actually. You talking about... yeah, I don't know what you're talking about. I'm sorry. Stop Picking Monkey, got any thoughts on how much Russia pulling from grain agreements matter? I want to understand first, is this... there's a difference between Russia announcing their intention to leave and Russia actually doing anything about it. Steely Hands made a point. There's already satellite imagery showing grain ships leaving Odessa. If Russia doesn't attack them, I'd go puts on wheat. Reserve Bank of Australia. I think it's smart. And Bitasko, hold that thought. I think it's kind of smart. My understanding is, well, I don't know what happened specifically today. I know last week or the week before, the RBA was like the first ones to actually, they didn't cut, they didn't pivot, they downshifted. They raised rates by less than expected. So I think it's kind of smart. You're starting to see a lot of countries. I know Canada did the same thing. I actually think Mexico did the same thing. And I think that kind of makes sense. Inflation's still high, but at some point, no one wants to, quote, over-tighten and basically create their own deflationary spiral. That being said, no one should be using the word pivot. No one should be using the word pivot. A rate cut would be tremendously dangerous. Yes, they did 25 basis points. Sounds about right. Phosphorus inspection resumed with Turkey and the United Nations. Ukraine and Russia not involved. Sounds about right. Lawbad, pull up GME. I hope they're going back up. I'm cheering for the apes today. Oh. No. Oh, man. They got fucking rinsed. Chem Life. Russian defense minister announced deal is suspended, not exiting. Yeah. Let's have the difference between what they say and what they do. If one of those grain ships blows up, then that tells you shit's escalating. I have no clue what the fuck's going on right now in terms of Ukraine versus Russia. It's getting to an interesting spot. Like, Russia almost needs to, like, shit or get off the pot. Yes, I already covered onsemi's earnings. I thought their earnings were fantastic. It's a very conservative company. I understand people are complaining about their guide. Not worried about it yet. onsemi has a lot of focus on two really good markets. What we're going to call... first of all, Penny, you might appreciate this. onsemi apparently has a lot of commentary in regards to industrial automation. Because they provide basically... Their two biggest segments are power and sensing. All right? Two things that are very important for high labor costs, and you're looking to replace human beings. You need sensors and you need high power. And guess what? Those are the areas onsemi plays in. One of their previous earnings releases, they specifically called out. They saw a growth opportunity in the future being high labor and high wages, actually bringing about more opportunities for them in the future. Did Qualcomm ever hit 100 billion in market cap? Yeah. They're already higher than 100 billion, right? Yeah, they're 128 billion. Yeah. At one point, they were over 160 billion, I'm pretty sure. It's not mine. So another Intel situation, earnings not equal to movement. Look back just last week. Not last week, sorry, last quarter. onsemi had a fantastic quarter. The problem with onsemi is their strategic moves. onsemi is a weird company in this regard. Actually, let me pull up an image. And then I want to go back and answer the question about Elon firing executives. Because he's going to get fucking rinsed again. Where is the... I want to show you. There's a chart that shows their gross margins. And it's super important to see. Nope. 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 Come on. Here we go. This is the post I saw earlier. This is a story of onsemi, and it's interesting. So, revenue you can see going up, but the revenue is not going up at the same line as their operating income or their gross margin. All right. Not even their EPS. The story for onsemi is this. In the last 2 years, their badass of a new CEO basically looked around the company. At the time in Q2 2020, their gross margin was 30.8%. Yeah, this is actually old, by the way. Their most recent gross margin was 49%. This is not just a semiconductor shortage going in. Part of this is them literally saying, we're getting out of these businesses, we're exiting these businesses. So that puts them into an interesting spot where in some cases their revenue will look less because they're actively like throwing away revenue. They sold one of their fabs just this morning in Japan. Like, that's what they're doing. They're focusing on like bigger, more important future markets. That's why they reorganize themselves to be basically sensors and power management. They're targeting like EV infrastructure and EVs themselves. So super interesting company. A lot of people don't understand this. So they're going to look at it and say, like last quarter, they released excellent earnings, but they basically guided down this quarter's gross margins. And they basically said, yeah, because we're investing in silicon carbide a lot more. We're also, our revenue might be a little bit less because we're getting rid of this. So then what happened is they go through this process. Last quarter, they released earnings. They were down like the first 2 days after earnings. Then people read, and then over the next 2 weeks, they hit an all-time high. So this morning, I bought more shares. I averaged down. And after Wednesday, if they haven't mooned by then, I'll probably buy some calls as well. onsemi, I thought, did excellent. And right now, their forward PE is like 13. This is not a company, by the way, that pays dividends. This is not a company that buys back shares. They are investing. They are actively investing. But they make cash. They don't need to raise any capital. They are a very, very smart, solid company. If you have a 401k and you're just going to tuck away shares for a while, you will hear no complaints on onsemi. They're a very, very good company. And I think in the future, they're going to abuse the shit out of some of the bigger companies that play in this space, mostly the European ones. So Infineon, STM, and NXP. Hey, Copper is Metal, how you doing? Hey, Necky Poo, how you doing, my friend? All right, guys, let's shit on Elon Musk for a second. It's always fun to do this. By the way, this might be one of the most popular posts I had ever made. Yeah, I got 200 likes over the weekend. All right. Buco Capital, who's a very smart dude. Elon has no interest or intention in paying the golden parachutes for the executives he fired. Okay, so Mr. Musk appears to unlikely to pay the golden parachutes the fired top executives of Twitter were set to receive. Under the merger agreement, those executives have been set to receive compensation of $20 to $60 million if they were fired. But Mr. Musk terminated the executives for cause, meaning he did it with justification, which may void that agreement. Two people with knowledge of the matter said. So my post specifically was this. Firing employees with contract agreements in California on your first day of ownership of a company and claiming it's for cause, Elon is about to take another L in court. If there was a way I could make money on this, I would absolutely play it. They're going to get their severance payments. Here's why. The idea that he was able to generate cause in the 1 day of ownership is extremely unlikely. And this is in California. California has the most employee-friendly laws. Any place I've ever worked at, especially when I had employees in California, the number of times we proposed shit and like legals like, wait, does this impact anyone in California? Because if the answer ever was yes, they're like, you can't. No fucking way. This is an incredibly stupid move. And for anyone thinking, oh, well, Elon's got more money than them, he will end up losing this one very badly. This is an easy call. Because the idea is this. He's going to allege they did something back in a time period in which they owned the company, which they were responsible for the company. So for him to go back and say, well, this was a specific issue. Nope. He didn't even assert what they've done, at least now. So this is extreme. What if hypothetically he links the execs to bots? Like if somehow he proves fraud. Fraud to who? fraud from the company to the company, by which they're the judge of it, he would have to already know it now to establish that he terminated them for fraud, basically for cause, as opposed to the other justification, which is going to be, quote, retaliation. And retaliation, he's not just risking paying their legal bills, he's risking punitive. Selling a company saying we have X people when in reality it isn't that many, but he basically agreed with their assertions when he got the yeah, he probably can't do that. He probably will be very unable to do that, specifically because he agreed to acquire the company and therefore dropped it as an issue. So it's a bold strategy. I assume he will not even take that one to court. So tomorrow I'll be speaking at a 500 plus billion in financial institution on why U.S. investors should be looking at repatriating their capital out of China. China's GDP data isn't real, and U.S. investments are increasingly at risk of being seized. China has become uninvestable. It's an interesting. I've seen the study he's talking about, by the way. This is a really cool study. I'm not sure how true it is, but it's a super cool approach. I actually like this. The greater point here, a lot of people always talk shit about like, oh, China's GDP data isn't real. I actually think their GDP data is generally speaking real. I think their approaches they use to get that real data is fucking fraudulent as shit. Okay? Put it like this. They are correctly measuring economic activity. That economic activity are things like ghost towns or 20 plus years ago when they were overbuilding steel mills and concrete plants because government officials were trying to juice their own GDP numbers and therefore forcing non-productive loans. That's why 4 non-productive loan banks got created. Yeah. Penny, I don't think ever being long-term hold on oil and gas makes sense. It's a cyclical. Why hold a cyclical ever long-term? Hit the up cycles, flee the down cycles, right? I could be wrong. Augustus, the tweet got 2K plus likes, which is a lot. It's a lot. He's a good guy, though. He's smart. I know that much. I've seen him before. But I will sit there and say, like, it's a popular topic. Like, everyone wants to flee China right now. To a certain degree, if we completely detach ourselves from China, we're undoing one of the big lessons that of the Cold War, which was it's a lot easier to avoid flare-ups when you have economic ties between the two powers. Penny says, you think there's far more upcycle? I agree, but I don't think we're in the upcycle right now. I think we're already approaching the down cycle. First of all, Penny, who was it that just this morning came out and said they expected oil to be in surplus in Q4 and Q1? Now combine that with this chart here. So XLE. XLE has went up even though oil prices did not. Long term, I'm very bullish on energy. I'm not sure I would jump specifically into an oil company. To me, the ones with the least, I assume, and you guys will correct me, I assume the best cycle is probably around infrastructure to support natural gas. More caffeine. That thesis we talked about when CVS below 100. I'm kicking myself. Yeah. CVS I never buy at the correct time. I mean, you can see, at least from the XLE standpoint. ChemLife, you must understand how long it takes for these things to play out, much longer than it's being credited. I understand that for energy itself. So if there is a way to play the broad, keep in mind, XLE is essentially just like Western big companies. I think there's a lot more places to play it. Energy itself can be going up. You're playing a derivative on it when you play like with their stocks. That's only my viewpoint. I would not be buying oil right now. First of all, again, look at this chart. This is the monthly approach. Okay. Energy has basically now at what, a 6-year high. Just like we say, don't short the holes, don't buy calls at what could be the top. Yeah, it was yeah, thank you, Wendy. It was the OPEC chairman who said specifically Q4 and Q1 were expected to be in surplus. So for me, energy, I'm still a big believer energy matters. I would be much more apt to play essentially like infrastructure for natural gas right now. I think natural gas is a little sexier. But that's me, and I'm not a good person probably at playing energy. Augustus, speaking of oil cyclicality, you keep hearing talking heads saying semis are strictly cyclical. How do I see semis as a more secular trend super cycle? Has anything changed my mind in the past months? No, it's always been cyclical. Yeah, but I'm sorry, energy guys. I do think semis can make an easier case for a super cycle. The problem is with semiconductors, you have to separate out the end markets really carefully. So, like memory, nothing's changed. Consumer devices, nothing's changed. They are still very much captive to their business cycle. What's really changing things is the transition of the automobile into essentially a data center on wheels. So, self driving and AI getting rolled out. That's where I think it matters. DDR5 is a new product cycle in the data center. Intel fucked over Micron when they pushed back Sapphire Rapids. It was going to be the first data center server CPU that was going to make use of DDR5. They pushed it back. That actually fucked Micron a lot more. When Wendy says semis long-term secular bull cycle, correct. Short-term oversupply zone for certain chips. In fact, now for probably more than half, or at least half of the end markets, 100% correct. I mean, look at Western Digital, look at Seagate, look at Micron. Classic examples. They're the most cyclical. You can pull one of their DRAM chips out and replace it with one of the others. There's no problem. You look at consumer-facing GPUs, absolutely oversupply. But then you go into like leading edge, like automotive CPUs right now, not so much. Data center CPUs, not so much. They're still in a better area. The bigger thing is that apparently Texas Instruments is looking at a potential price war for their power management integrated circuits. Hey, Petty, how you doing, my friend? Yeah, Milwaukee Blizzard. Kind of crazy. XLE is back to where it was when the oil price was 50% higher. That's what's weird. So yeah, again, this is the monthly chart. If I just go to the daily, you can see energy had a nice breakout. And the price of energy didn't necessarily do shit. So at some point, I'm really tempted to actually go short. I'm not going to do it when Biden's talking shit. I might wait till after midterms. But at some point, I think this corrects back down because it always does. The irony will be this will drive people crazy. If energy stocks go down while the price of energy starts going up, they're going to be screaming loud on that one. Whiskey Jack Black, I love your observation. Energy infrastructure is like playing a utility. It's all tolling. I agree. But that way, I don't have to worry about any issues in regards to specifically the energy of the commodity or the price of the commodity itself. They just get shipped. And long term, I like that argument. More energy will be transported, particularly natural gas. Yeah, Prometheum, how you doing, my friend? Remember, XLE is like 40% ExxonMobil and CVX. Fair enough. Both of them have a lot of refining exposure, and earnings have barely fallen since Q2. Correct. They're doing very well. They're giving money back. Still not the timing for me to jump into them. I mean, look at ExxonMobil. ExxonMobil, good Lord. They've been on quite a run. They're basically, I'm pretty sure they're at an all-time high. Not the time I'd buy them right now. Check out ANTM. Is that Anthem? ANTM. Some small stock. I can't pull it up. You can play Rye if you want exposure. AT. Oh, it's a farm. Holy shit. What they announced? It's biotech, so new data, acute myeloid leukemia therapy. Good for them. Yeah, so biotech has good news and they're up. Meanwhile, if a biotech ever has bad news, they'll drop significantly. ASTS is ripping. Let's see. Yeah, they're not doing bad. When you look at a chart like this, it's scary. But yeah, up 12, almost 13%. Did the apes go red? I'm going to be so sad for them. Oh, they were up 20 something percent. I bet you the accusations of crime are loud as fuck right now. I feel bad for the apes. They're getting rinsed. Unfortunately, price movements in pre-market or aftermarket, if there's not any news, they should all be treated as fake. All of them. Even if we like them, that's more reason to treat them as fake. All right, folks, be right back and prepare my food early. All right, folks, we're back. Thank you for being patient. Talk about food. Do I eat pasta by chocolate sauce instead of tomato sauce? Absolutely not. I wouldn't trust anyone who does. It sounds weird. Dealers are short calls. What does that mean? How do we hammer them on that? Mm-hmm. Yeah, Penny, that's right. Lawbad, at what point does Cohen sell? You'd have to disclose it. Keep in mind, if Cohen actually sold out of GME, he basically gets removed as chairman of the board. You don't get to be chairman after you sell like that. Hmm. Hey, Steely Hands is what you were pointing out. The Ukrainian Turkish UN convoy of 14 grain ships continues to sail south after breaking through Russia's naval blockade of Ukraine this morning. The Russian Navy is nowhere to be seen. Yeah. Turkey, I bought some IWM. It's currently down 7%. That's fine. Play a bit of a rebound. Lawbet, I think he cares about GME. Interesting. I'm not exactly sure how to read that. Yeah, rematch it. Yeah, breaking through is. I don't think anyone's stopping them. It's an interesting choice of words, I will say. Yep. U.S. oil output climbed to nearly 12 million barrels per day in August, government figures showed on Monday, the highest since the onset of the COVID-19 pandemic, even as shale companies have said they do not see production accelerating in coming months. Yeah. It's part of the reason why I don't think Biden should be talking too much shit right now. I get it's like a political strategy, but it's like, don't. It's not mine. I actually bought a few more shares of OnSemi. I'm playing that. Joaquin Cato, sorry if it's been asked a dozen times. What's my take on Meta? People oversell based on emotions or dead stock long term? Believe it or not, kind of both. Kind of both. The problem with Meta is this: if you are an investor in Meta, you are not getting any money back right now, not in the short term, because Zuckerberg said, God damn, downset. This is bullshit. Zuckerberg said he's going to spend a lot of money. They are going to create a new ecosystem, a new product, which will be a big moneymaker. Now, moving away from that, all right, the question is this a fairly valued company from earnings, even if it's not giving you money? Yeah, I think it is. Forward PE is 12. If they converted to pure free cash flow and instituted dividends, this is much more attractive than a lot of fucking old school industrials. The thing is, there's the growth aspect. They're basically creating the metaverse. So if you play them right now, you are playing a bet that they will be able to create something. That being said, this is not a company which will ever have to go to you for more shares or more debt. Fergal, you don't think the metaverse shit is going to play out well unless they give away Oculus Quests? I think it's way too early to make any predictions like that. And I say this as someone who lived through basically the creation of the internet era, and there was a lot of shit back then. I remember in my college room, talking with friends like, wouldn't it be cool if this, or wouldn't it be cool if that? And it all ended up happening, and people are making a fuckload of money off of it. But yeah, hail to the Kaiser. I think you raised the important point. Why buy early? And I love that. Shut up, it's not mine. Farmer Cliff, I love that. Won't be profitable till porn is in. Porn will drive it. Yeah. Ooh, lots of notable earnings. I don't know so much as earnings plays, because the fact that Wednesday's FOMC, yeah, that matters. But there are a lot of really interesting companies that are reporting. I'll tell you right now, the one that I will avoid tonight is NXP. NXP is a company I think eventually gets bodied by onsemi. NXP is it's either NXP or Infineon right now. They change around quite a few times. They are the two largest provider of chips to the automotive industry, but they play in the entire ecosystem of automotive. onsemi only plays in certain areas. These guys play in all of the areas. Also, it's European. European companies tend to get priced a little bit lower, so I'd be cautious about that one. Arista Networks should have some interesting guide. Arista is very big in data center, and obviously the news from Facebook about upping their spend could be really interesting. Put it this way: you will want to read Arista and their guidance to understand how it potentially impacts AMD. But yeah, I wouldn't touch BP. I don't think they're a good operator. I wouldn't be surprised if BP underperforms the rest of their oil peers. But I'm biased against BP. I will always be biased against them. I think they're a shit cow. Qualcomm calls. If JPOW is dovish, absolutely. Absolutely. I assume Qualcomm's going to have good news. Ready matchup. If the so-called metaverse gets traction, there are at least 5 competitors ready to jump in. Thinking Meta owns the space could cost you money. Who? Who would own it? I think their biggest opponents is probably going to be NVIDIA. But like, from a credible standpoint, who else was going to be trying to compete as a true like eco? I know gaming companies will try to compete, but I don't know about like on a social aspect. I don't know about that. All the video game networking companies, but they're going to play in the video game space. Put it like this: I would anticipate the future strategy. We're speaking very, very early. Yeah. So hail to the Kaiser. Meta's investing in the infrastructure, i.e. the platform, the place you can log in and access, and the hardware. And basically, by the way, supposedly, the operating system. I would not look at video game companies as a direct competitor. None of them, quite frankly, are big enough, with the exception of any of them owned by Microsoft. Instead, I think in the future, Facebook would essentially rent their platform to video game companies. That's what I would say. GTA can already do that. Do what? GTA cannot handle, like, their infrastructure cannot handle what I think Facebook's trying to do, like, at all. Virtual booba. Yeah, someone mentioned the cruise lines. I don't like them. The cruise lines ended up taking on a lot of debt to basically get through COVID. At some point, they have to pay it back. I wouldn't be surprised if they start issuing more shares. You don't want to own them the day they announce that. Bird. So Meta is hoping to be the AWS of VR. I don't know if it's trying to be the AWS specifically. I actually think of it as the Microsoft, the Windows. What Windows did to the PC era, someone has to do the equivalent on both front end, portal, i.e., operating system, so like Windows, and then someone else has to do the back end stuff, i.e., the JavaScript. The back end stuff, I assume the answer to that one is going to be NVIDIA through all their tools. The front end stuff is still up for grabs. Carnival already scrapping ships. Interesting. Yeah, I know. Hey, the early internet, man. Or hell, HTML. You know, that backend stuff, that's going to be the CUDA, the DLSS. That's going to be all the different software packages and libraries that NVIDIA already has. Robbie says, nothing Facebook has provided in the last 10 years proves Meta will be successful. You do know they have a fuckload of cash. They make a fuckload of money. Like, shit on them all you want. Like, and I know there's a lot of good skeptical questions to have about Meta and about the metaverse in the future. But if that's your take for the company that's basically monetized and created social networking, I'm sorry. Just a web page that made how many billions of dollars? We shit on them, rightfully so. You are aware Meta earned 118 billion fucking dollars in the last 12 months, right? Like, I don't think you have the best take here. They clap the cheeks of Tom and MySpace. Oh, Google Plus failed to get traction. Yeah. If we're evaluating them as a business, I know it's a web page, but it's the only one of its kind. Yeah, we will see. But as of right now, $118 billion. So the idea that you're going to say, like, oh, they haven't created anything, they're going to fail. They've done a pretty good fucking job. We basically complain that they're investing for growth and not giving that money back to shareholders. Dealey says, owning the access point to the VR universe is an absolute boon to whoever. Yeah, I agree. I just don't know if it's them. That's the bigger question. Like, I still think they have big competition in the future from Apple. Someone mentioned Apple, you're right, and NVIDIA. So, anyway, IWM, see if they were going to do any kind of gangster shit today. Fig says the industrial metaverse is very intriguing. You wonder what will be the killer apps end up being. So I assume it's the whole notion of digital twins. I assume so. Yeah. Yeah, the iVerse. I think that's the area you'll see companies, obviously like Qualcomm, play. That's a big growth driver, apparently, for NVIDIA right now. Yeah, Windmaster, I like your viewpoint. I think this is the central point about Meta. I'm not touching Meta now. Is it have a good valuation? Sure, but you're not getting money back. You're not getting money back. They're going to invest a fuckload. Like, if they're going to have a home run, you're going to know about it with enough time to jump in. I'm surprised it's down so much right now. I kind of don't get it, but all right, fine. But I don't think I'm in a rush to buy it right now. Yeah, Wendy says, you think people hear metaverse and hear some 3D virtual world? I agree. I think we don't know fully what it is yet, so I'm going to hold off kind of judging it. Because again, I lived through the creation of the internet. By the way, to me, the big winners in meta spending, it's Qualcomm with their 3 Snapdragon chips per Oculus set. It's NVIDIA for all their GPUs that are going inside the data centers. It's AMD, it's Arista, it's Marvell. All the companies basically selling all that equipment so Meta can blow all those, CapEx and R&D dollars. They're the winners. Oh, Mark's an asshole. Yeah, I'm more interested to see what Apple does, quite frankly. Apple has Apple has a lot more success in terms of creating products. They don't create a lot of duds. So Apple's the one I want to see how they end up pulling that off. Anya, what do you think is the most likely timeline? Oh, no clue. It's probably a lot of time. It's probably a lot of time. You think we're likely to see localized worlds within applications? Could absolutely be the case. Why does anyone buy Nikola? It's all downhill from here, right, Penny? What the? What's the story here? Why? Nikola and Key State Inc. partnership on hydrogen supply? What? So their trucks that can go downhill can now explode? I don't get it. They signed an agreement for something that'll be operational in 2026? What the fuck? Give more caffeine. You would argue Apple TV is a dud? I will disagree, my friend. I love it. Not just because I love it. What's the point of the Apple TV? There's two ways to look at it. One is the hardware side, the other is the software side. The software side makes sense. The hardware side, you and I can question whether it makes sense, and that's a fair question. But I absolutely love it. Not the service, you're talking about the hardware. Okay, fair enough. Yeah, I like it because I mean, I'm an Apple user, so the ability for me to basically like really easily sling my iPad screen up on the TV, I fucking love it for that. Love it. I'll be right back. Let me grab my beer and my food. Okay. Thank you for being patient. We're back. Come on, IWM. Keep going up. Yeah, you know what this. I'll only reason I like it is the idea that you can basically connect it to your other devices. That's the only reason I liked it. So yeah, stealthy. Listen, please try to be a little bit respectful in here. Like, yeah, that's not a good statement to make. All right, someone getting attacked with a hammer. Like, I'm avoiding talking about the Pelosi situation for a reason. But yeah, let's not. It's no problem. But like, we've got to be a little bit conscious of like, yeah. Keep in mind, we want to talk about the idea of him being an insider trader. He has not done very well this year. This year has been very poor for him. He seems to have picked the wrong timing to jump into Nvidia and Micron in particular. Yes, do not hammer people. Yep. Hey, Gosu, how you doing, my friend? Eat and drink beer. The Pepe, unfortunately, that guy is an example that we definitely have a mental health problem in this country. Oh, this is interesting. Oh, God. Why'd you post Gugarin? I don't like this guy. Anyway, yeah, fucking clown putting up this watermark, but all right, fine. 6 possible scenarios. 50 basis points hike with a dovish press conference. I don't think we'd get that. Difficult to conceive of a scenario given inflation levels. Just that, yeah. All right. 50 basis point hike in a hawkish press conference. I would disagree with that one as well. I think we get 75. There's no reason from a data standpoint we get less than 75. There's also no reason we get 100, by the way. So 75 basis point hike in a dovish press conference. Second highest probability of playing out. If you saw the Fed give explicit guidance for the December meeting, then that is likely viewed as a dovish outcome. 75 basis point in a hawkish conference. Most likely outcome, optionality for December in 2023. This team also views the outcome most expected by bond markets. It says there may not be a significant move in yields that keeps equities from melting down. S&P 500 down. 100 basis point hike. Both these scenarios don't happen. No fucking way we get 100. You more caffeine? What's this? Fed eager to recalibrate their Fed rate setting to reduce the risk of over tightening. A more resilient private sector means terminal rate may be higher than expected. Here's the fun thing. I would love to see someone post the 10-year in the same time period. The 10-year is interesting because basically this came out and it top ticked the 10-year. This leads a lot more. This is me being a little bit tinfoil hat, guys. I think the piece came out, the first Timmy Leaks piece, talking about to recalibrate their rate setting, potentially introducing the idea of a downshift. That was done to basically stop something overseas from blowing up due to the interest rate movements in the US. Essentially, our bond market got more aggressive than the Fed. And so the Fed did that to actually pull the bond market closer to alignment. The funny thing about this one, and I already showed this earlier at the start of the stream. People talk about how there's an extra hike coming in, and the idea that we're now going to see a higher terminal rate. That was already priced in. Bond market at the time was more aggressive than the Fed. If we're going to believe it, all right, we already had a terminal rate between 4.75 and 5, which is now with the new Timmy Leaks piece. The new Timmy Leaks piece is actually not something different from the market. Believe it or not, that's why I don't think what's happening today has anything to do with his piece. Yep, Wendy's correct. No turkey. I don't think the terminal rate's above 5 now. I think now the expectation, if you believe the Timmy Leaks piece, is 4.75 to 5. It's always expressed in a range. And before, people viewed it as 4.5 to 4.75. Now they're pushing it up, correction, they already pushed it up, and now the Fed floated the idea. Presuming the second Timmy Leaks piece was a direct float. Um, yeah, I'm going to go back to, hold on, who is it? Who was it? What was that point of the timing? Yeah, Milwaukee Blizzard said that first article had crazy good timing. The market was about to dump right before it hit. Absolutely. But look not at the equity market. Look at the 10-year. Look what it was doing before then. And then that piece comes out. Look what happened to the bond market. I don't think they care. I've said it before. I don't think the Fed cares nearly enough about the equity market as people suspect, but I think they looked at the bond market and that was their concern because that was causing damage elsewhere. Caffeine, here's your tinfoil. Swiss banks own a lot of U.S. equities. So they took out a loan and bought tons of bonds. This causes the Dixie to weaken. Yields go down. Stocks go up. Yep, to give it a chance to dump. Then they replay that loan on Friday. It's a good question. I think in general, foreign governments buying U.S. bonds will accomplish a lot of good for the equities market. That's why I have my bigger tinfoil hat theory is eventually you see some kind of agreement basically between the U.S. and China where the U.S. will remove a lot of their goods on tariff lists. Will also undo at least some of the semiconductor restrictions, and basically in return, very quietly, China starts resuming buying U.S. bonds. Mm-hmm. Mm. How did Swiss know earnings would be bad? Now this is too tinfoily hat for me. I see the charts, but no, I don't agree. Yeah, by the way, Windmaster is correct. I don't think the 10-year rising to 4.25 is the issue, but the pace of the rise was scaring the shit out of people. That was causing damage, I thought. So that's what I think happened. That's my tinfoil hat theory. It was the bond market that pushed that piece out. It was not the equities market. I've seen a lot of people say, but the equities are going to crash. By the way, if that article didn't come out, the equities probably crashed as well. But it was the bond market that got them moving. Why does the pace cause damage? It brings in uncertainty. And for something like bonds, basically, there's a secret third mandate, not even secret, from the Fed. The third mandate for the Fed is a kind of a well running, an orderly market, particularly in the bond market. They don't care if the market goes up or down. They care that there's participants. Okay, there needs to be some notion of liquidity. If it dries up, it can potentially cause a lot of like foreign currency damages, which we've seen. Yeah, no time for the bigs to hedge. Exactly. Yep. Someone say money. There's a lot of chatter that there's shit out there waiting to break. Something happened to the UK pension funds, and I'm sure that's the case. And not all of it would be stopped. But yeah, highly rated, supposedly liquid securities aren't supposed to trade like shit coins. That is correct. So that's my move, my theory, my tinfoil hat theory. No, this piece that's saying they think like the Swiss bank had this perfect entry and exit because they knew earnings would be bad. I don't believe that at all. Sophie getting love, you're saying, huh? Hmm. 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 By the way, you guys want to hear something fucked up? Elon Musk has not filed a Form 4, which means we now know he did not sell Monday, Tuesday, Wednesday, or Thursday now. Right? He has not posted that he doesn't need to sell. And no one knows how he generated enough cash to pay for the Twitter deal. There is still a belief among some diehard Tesla haters, so grain of salt, that he actually took out a bridge loan and needs to sell at some point. He just didn't want to get front ram. Walter Bloomberg begging for donations. The bottom is in. Mm-hmm. Tesla shares, yeah. Doesn't seem like JPAL would want to signal a slowing or downshift at this point. Are you sure? Could be. What I think people forget the most is that there is legitimate signs right now that inflation is slowing down. CIA doesn't need loans. That's true. What's this? This is Sophie. Holy shit. Yeah. Yeah, a lot of calls getting smacked around. I assume the IV is ridiculous. Six, 7.5, 6, 6, 6, 6. Yeah, all for the 11th. Interesting. Sophie's got some weird pump and dumpers promoting it for a short squeeze. Oh, man. Interesting. Mm-hmm. Here we go. Guys, this is an important tweet. All right. Mr. Baggins says, tough call. If he does and shit rips back up, we'll be doing exactly what he said he didn't want to happen. When the Fed talks about financial conditions, here's a post from Andy Constant, who, by the way, has been spot fucking on the last 2 to 3 weeks. Easing of conditions leading to a hawkish Powell is the current bear narrative. Conditions have eased just like the lead up to Jackson Hole. Only the equity market has really rallied. FCI, which is Financial Conditions Index. This is what actually the Fed means by financial conditions. It's more than just the equities market. It's more than the spot. Has eased a bit, but is way tighter than at Jackson Hole. He won't pivot, but he doesn't need to be Jackson Hole hawkish. This, basically, the higher up this is, the tighter financial conditions are. All right? So Jackson Hole happened because while it was going up, then the rally happened and everything took part and it went down. JPOW got tough. Things tightened up. Now, recently, we've started to have this equities market rally. It's only moved us down here. We are still tighter, much tighter than we were at Jackson Hole. So Andy Constant's kind of pointing people out that, yeah, anyone thinking that because we've rallied basically to 3,900, the Fed is not going to be sitting there saying, oh, got to punish them. Because overall, financial conditions are so much tighter than they were back at Jackson Hole. Make sense? Yeah, I'm with Wendy. I think too many people are presuming a one-to-one relationship between the equities market and like inflation. All right. Here's the thing. If they see inflation going down, that's going to impact where they go in terms of rates. All right. If they see inflation going down, if magically inflation came in at 3%, we're all doing backflips. J-Pal's, bumping lines of cocaine off hookers. The man deserves it. If that's the case, they're not going to sit there and just keep hiking rates because they're like, oh, the stock market's above 400. Fuck them. Must punish them. They are trying to raise rates to beat up on inflation. If inflation goes down, they will eventually stop. They don't care about the market in that case. They care about the market when they still see inflation going up. Hmm. Forgive me, Nugget. Good question. Hold on. You say you wonder, why would the Fed try so hard to thread this needle? If they supposedly have inflation on the ropes, why not just be complete assholes for 2 more months and knock it the hell out? Because if they over tighten, it creates a potential deflationary cycle. And I think there's a lot of credibility now for economists who like to point out you can't have sustained inflation. It's dangerous. You can't have what they call unanchored inflation. But if you have sustained deflation, if a deflation cycle kicks in, they're a lot harder to break. It causes damage. Hand to the Kaiser. Dumb question. Does the Fed care about the market or the economy? No, it's not a dumb question at all. It's a brilliant question. The Fed cares about the economy. The problem is, how do you measure the economy? There's so many different ways of looking at it. One of the supposed proxies is the market. But yeah, if deflation starts, that's harder to break than inflation. Deflation is dangerous. All right, guys, let's check the SPY, get our poll ready. Because I know you guys love you some poll. All right. I'm going to do 387. All right. 387 is going to be the pivot point. All right. You have 2 minutes. Get your bets in. Go. If you do not see the poll, please refresh Twitch. Boromir, do I think the 75 basis? Yeah, it's already well priced in. We've already priced in like another 150 basis points of increases. Mr. Baggins, it's interesting. You say, it seems like J-Pow was leaning towards over-tightening and hard landing than under-tightening. If he had to choose one of them, he wants to over-tighten. He cannot risk inflation getting unanchored. That's dangerous. All right? He absolutely cannot. There's also an argument to be made that a lot of what he says is to push the market in, or rather to push financial conditions. So obviously through the market, but to basically use their bully pulpit as a weapon to start pushing financial conditions to tighten, which you could argue Jackson Hole is a great example. I mean, all it took was his Jackson Hole speech to go from the financial conditions index at 128 all the way up to 154. So he kind of proved he has the ability to just talk shit and get it going. Mm-hmm. Small volume. Chung, did I comment on Semi today? Yes, I did. I bought more shares. I like their earnings. They're not getting a lot of love right now. That's fine. Same thing happened last quarter. I'm not going to add calls until after JPow. Red Hot Banger. Can you ask me to review Nikola? Sure, Nikola sucks. The problem with Nikola is this. They currently do not make money. I'm pretty sure they actually require more cash. So dilution is almost certainly a concern with these guys. And they haven't shipped shit. I do not like them. No, I do not. I think this is a very, very poor time to invest in a company that's very speculative. I would rather invest in value, or if I'm going to invest in a growth company, I want one I know won't have to dilute me. Basically, it's back to the idea of like, why would you buy a company like this when there are so many better options in a lot of different areas? We are definitely shitting on Nikola. But the idea they invested in a hydrogen project today that won't kick off until 2026. Remember, their founder is currently being accused of fraud by the US government. They don't do that just for nothing. Mm-hmm. So, by the way, Robbie Mashit, I disagree with you. Say a recession is the only thing that'll stop inflation. No, it's not. It's worked a lot in the past, but that's not necessarily a guarantee. You don't have the sample size to back it up either. It's likely we have a recession, by the way. I expect a recession next year anyway. But here is the post by from Morgan Stanley. If you think inflation is a monetary phenomenon, always and everywhere, look out below. This is the monetary supply, M2, year-over-year change. It leads by 16 months. You can see the correlation. They've already showed it's fucking dying. So the expectation is, starting today, in the next 16 or 15 months, this is what inflation's going to do. U.S. Treasury expects to issue, $550 billion in net marketable debt from October to December. Oh, wow. What the fuck they doing? More caffeine. You remember a conversation we were having like 6 months ago? You distinctly remember you saying recession in Q1, Q2 of 23, and I've never changed my viewpoint on that. I've been consistent. More debt issuances, more bond supply, yields go up. Sounds about right then. No, market did not like that. What happened? What happened? That shouldn't be up. Oh, that's terrible. By the way, do it's wacky? Growing up, you always heard you had to have your food, you had to have your Halloween candy investigated. You know, you get your Halloween candy checked out. Never accept like open candy or like cupcakes or things like that, because there was always a story of one person who found like poison in their candy. You know, the one incident it's based on, it was the father of the kid who tried to poison for insurance money. Is Biden talking? No, that's at 4:30 apparently, which I am not looking forward to. ELT selling off. Oh, good lord, what the fuck happened? Something's going on. Hmm. The U.S. Treasury reports that in the July to September 2022 quarter, it issued 457 billion in net debt. So why is it going down then? No clue, terrible Terry. No clue. I know it was up earlier, but wow, TLT just fucking died. Is that really the reason why? I assume it's more of the expectations for the future. Yeah. The US Treasury expects to issue 550 billion in net marketable debt. Yeah. That's what I anticipate is causing what's happening right now. It's literally only SPX option flow. All right. Is Vestas a good investment? I have no clue. It's a good question. Someone smarter than me can answer that. Yeah, TLT was the true shit coin. I mean, counterpoint, TLT is still way up here. See the map. Oh, lots of blood. No, a little differentiation today. Energy's doing pretty well. Good for them. Healthcare kind of proving to be a defensive stalwart. Financial services weird. Shall we fade this? I don't know. AMD is the one I want to take a look at. AMD just dipped under 60. The only reason why AMD is the one I would look at is because their earnings are before Jackson Hole. Nothing you tend to hold after Jackson Hole, or not Jackson Hole, sorry, FOMC, I think you buy at. Yeah, I'm with you, Kiwi. Lots of differentiation today. This actually looks healthy. Yep. I mean, remember, guys, look what we've seen the last few weeks. All right. We've been on a nice. If we go down, that's not the end of the world. We're not in a new bull market. I don't think so. We'd have no reason to be. That shouldn't happen till at the very least we know the Fed has literally like paused already. Not downshifted, paused. And right now the inflation data doesn't say that happens yet. Arrogance, buy 300 next year, Jan. Interesting call. First time chat, so thank you for joining the club. Yeah, I don't know if I'd go that far yet. Yeah, I find that a bit aggressive. I don't think earnings turn to shit before them. Yep, W show, you missed the poll, sorry. All right, we're back. Sorry, guys. I don't know what the fuck going on there. Give me more caffeine. You're short arc. That feels ballsy. Crazy as it sounds, I wouldn't short the shittiest of shit. Like, just feels dangerous. Then again, a lot of the rally has previously not been up on the good on the shitty stuff. It's actually been the good stuff. By the way, guys, I bought AMD calls. Windy, Prometheum. Your base case is 200 in EPS and a Fed funds rate of 4 point. Yeah, so basically 4.75 to 5. Which would probably put SPY at 300 to 330. Interesting. I grabbed the November 18th $65 calls. Yeah, Tower Force. The stream has cut out more, but once I got one of those power lines, it's definitely been a lot better than it was when I used to get like cut off multiple times during a stream. It's only the first time it's happened today. Knock on wood. J.S. Gellen, I feel you. I feel you on this one. Ms. Garrison, looking for a long-term investment and thinking obesity-related companies will do super well. I agree. People getting fatter, you lose weight or get sick. Thinking Med, I like CVS, any others. Isn't it like Novo Nordisk versus Eli Lilly? McDonald's calls for when people give up. Eli Lilly's an interesting one. Here's the problem. This is a very expensive company. Not only that, aren't they like an all-time? I think they're like an all-time high. Eli Lilly's earnings are tomorrow also. Tomorrow morning. So be careful. Yeah, Eli Lilly and Pfizer. Someone asked me about Pfizer earlier. I have shares in my 401k I will not touch. I will hold those for years. I actually like Pfizer. Novo Nordisk is cheaper and their drug is already in the market. On the other hand, I've heard stories that apparently Lilly's is better. I don't know if it's true. Reddit swap. You're shorting Lilly, but they're up 10% and you're starting to doubt your decision. Well, earnings are tomorrow. Yeah, if I was going to play Lilly, I mean, look at this chart. This is outrageous. For a lot of the big drug companies, this is insane. Okay. The forward PE is 39. This is like the most expensive drug company. Planet Fitness is already up today. Yeah. Yeah. Novo Nordisk went from 36 PE to 3.8 forward PE. Yeah. But supposedly, guys, their obesity drug may be the most successful drug of all time. So keep that in mind. I'm not playing against it. I don't know enough. Yeah, if you were a long-term investor in Eli Lilly, you did fine. Soren Kiwi, we really are seeing the overpricing of defensive companies during this bear market. I know, I agree. I agree. That's what's fucked up to me, Kiwi, is how many times, like, for example, I've always people sitting there saying, like, Apple's expensive, Apple's overvalued. And meanwhile, it's like they're cheaper than Coca-Cola, Hershey's, Costco, Lulu, well, obviously Eli Lilly. Like, I can name all these different companies that's cheaper, then I'm always like, give me the stock ticker of Apple's comparison, and no one has a good one. It's like, eh. PMA rehab. Is obesity drug something to make you lose weight? I think it makes you lose weight. Yeah, supposedly there is the possibility. FinDiv scrap. By the way, I like Novo Nordisk a lot. I don't have any positions in them. I actually like them a lot. There'd be a lot of good reasons to like them. Boromir asks, still holding Apple calls? Fuck no. I sold those last week for 70%. I took my victory. Apple is not a company I want to hold over the long term because some morning we're going to wake up and there will be some announcement of antitrust. Antitrust is the downside to Apple. Their business will not fuck up. They are too good. Downside will be something external because they're too good. Yeah, people do anything but work out. That's true. So yeah, Eli Lilly's new drug is supposed to be like dope as shit. So what's on Procter and Gamble? Wendy, you finally got paid for your Twitter shares. Well played, my friend. Yeah, I think I finally got paid for my last Twitter share. Lots of puts being bought on Airbnb for this Friday, but too scared to play it. I feel you. See, now, dude, what if Musk got the capital to buy Twitter from Putin? That'd be funny. I'm pretty sure he would not have. Keep in mind, when there was all the conversation about, like, oh, what if Elon shows up with a bunch of Russian money to get out of the Twitter deal? You have to acknowledge him being labeled a foreign agent would basically cripple SpaceX and Starlink. They have a lot of government contracts. That would be extremely bad. Yep, the 10-year went up, by the way, recently, which you guys were pointing out. See if it goes back down now. The dollar was stable throughout this. That's a lot of good news, right? He should have gotten money for Trump. I just said about the foreign agent thing. Just kidding. CM Bird, there's an interesting one where one of the big princes from Saudi Arabia was an investor, a co-investor. He was already an investor in Twitter. So I know Senator Representative Chris Murphy from Connecticut posted something that he was going to have CFIUS look at the Twitter deal. And I even posted on Twitter, and it's like, Twitter already had Saudi money. Why are we complaining now that it's Elon with Saudi money, right? SpaceX and Starlink, don't get me wrong, those should always be under national security review. Always. That's fair. But yeah, the Saudi money aspect on this one on Twitter, I don't think so. Cool thing is I don't care. I've already sold out of Twitter. I already made my money. So CFIUS can go fuck him over. CFIUS can, and absolutely, if you guys are thinking, what's CFIUS gonna do? Make him sell? You're goddamn right. And then you're thinking, oh, but he'd lose money. Again, you're goddamn right. This doesn't matter. If you don't think the government has that power, oh, you are in for a nice little lesson. Dealy, you'd say there's a difference between Saudis being invested in a public company and being big holders of a private company. But if the company's Twitter, like, I get it for a company that basically runs, operates through government contracts. So like Starlink and SpaceX makes perfect sense. But Twitter, I don't think so. I can see the distinction between a public versus private company. I can't see the distinction, though, specifically Twitter. Is Chris Murphy accused of insider trading? The TLT in 10-year just keeps dying. Huge potential for more blood. Question, Wendy. I think this is the one. This is an idea you mentioned before. Weren't we looking eventually for some kind of i.e., if you had firms sitting tight in bonds, weren't we at one point talking there was an expectation that you may eventually see a sudden move in bonds as people sell out of bonds to essentially rebalance themselves in equity? Is that the case? I don't know. I'm not saying that's what's happening right now, but isn't that something we should be on the lookout? Essentially, is there always going to be, if we're ever going to expect a rebalance or any big move into equities from institutional money, shouldn't we be also looking for first a downward move in bonds because they sell out of those? I don't know if that's true, though. CM Bird LLC, a social media company where CM Bird only shows his cock, being owned in no small part by Saudis, and CM Bird LLC, a government contractor, being privately held. At some point, the corporate veil gets. I agree with that, yeah. Why would they do that now? Bonds have gotten significantly more expensive than stocks, or stocks have gotten more significantly expensive than bonds. Which do you mean, Prometheum? Rebalance should be in the other direction. So you think people should sell equities for the bonds? Okay. I just bet if you saw a lot of the big institutional money was already in, quote, overweight bonds, overweight fixed income. I don't know if that was the case or not. So either way. Yeah, someone mentioned small caps were doing better than the big stuff, and I agree with that. IWM is where I'm playing probably the next few weeks. I like their valuations. To me, IWM, and I mentioned this earlier, I feel like you get to avoid specifically you get to avoid a lot of the issues around like big oil and big mega cap because IWM has got neither of them. And both of them, I think, are going to be kind of volatile moving forward. Penny, you're looking forward to J Powell spanking us tomorrow. I got bad news for you. You're going to have to keep waiting. He doesn't talk to us until Wednesday. Yeah, Penny, Wednesday. FOMC is a 2-day event. Starts tomorrow. They start meeting. They sacrifice a few virgins. They drink a lot. The cocaine gets whipped out. But they don't actually make their decisions and then communicate them to us until Wednesday. And today is Monday, my friend. Big money is very underweight long duration bonds. Yeah. But are we seeing the short shit move more than the long? By the way, VIX has barely moved. I don't know if it matters or not. The VIX, I don't know if the VIX is broken or not, but oh, you're fine, Penny. Has Powell ever pre-release decisions? No. He's operated under a very strict cadence. He's done a great job in that regard. Ms. Garrison, the DIA has been on a run too, and I would argue it has to do with financials, energy, and healthcare. Financials, energy, and healthcare have done very well recently. How do you think I feel? UNH. They have been fucking chatting out. Look at this stock. Didn't appreciate the fact they broke through. In fact, yeah, as of today, they chatting the fuck up. With us. Hey, Zartiker, thank you very much for the sub. 8 months. It's been so long. Look at UNH. I said a few months ago I did expect healthcare to be a good strategic sector. I wish I had listened to my own advice. I have XLV in my 401k, and that's actually something I'll hold for a very long time. SCHD. Dividend fund. Ooh. I don't know nearly enough about it to be smart. It's interesting. I don't know enough about it. I'm sorry. Gaseous clay. Yeah, the VIX only includes the 30 DTE, which we know people are not doing a lot of. People want more degeneracy. All the shit stocks are up, by the way. Peloton, green. Palantir, green. IronNet, green. Robinhood, green. God. And DraftKings, I know some of you guys like them. Sorry. Thoughts on LTPZ? I don't even know who that is. Let me check. LTPZ. PIMCO Tips Index. Oh, I'm not smart enough. I'm sorry. Not Uber. Well, yeah. Yeah, Chem Life. If it's a quality screen where they overlay all that stuff, yep. If it's good quality stocks, I mean, a lot of prices are relatively speaking cheap if you have a longer term perspective. Read one. Doesn't that mean the IWM is susceptible if garbage stocks have been moving? I don't know what you mean. Small caps are still, relatively speaking, undervalued, if you still believe valuations matter. Nose Kisser, am I playing Qualcomm earnings? Very likely I will, but since it happens after FOMC, I'll probably buy in. I already have a Qualcomm longer position. So I don't think they go down either. I like their setup. AMD is the one I'm playing before then. So I've already jumped into AMD. Yeah, Ford's a shit stock. I always come back. Twitch streams, you hope on semi pumps tomorrow like last time. I think technically it didn't start pumping until 2 days after. XC Runner, thoughts on Pfizer earnings? I'm not playing them. I already have shares in my 401k, so I am playing them. But since Pfizer is a really good dividend stock, I'm just going to hold them for years. I want to see what they talk about in terms of their pipeline. But I like Pfizer, I like as a company. The thing to understand now is you are not buying Pfizer for COVID-19. You are buying Pfizer, as crazy as it sounds, because they're going to buy other companies with a good pipeline. Jay Skelling, do I expect On Semi to bounce back? Yes, I do. Presuming the entire market doesn't just fucking die in the next week or so, and keep in mind, there's a non-zero chance that happens. But yeah, I would expect On Semi to go ahead and bounce back. I have not bought calls yet. I'll probably swap out my shares for calls come Wednesday after FOMC. But FOMC is important. When will Micron bounce? Micron has been doing relatively well. All right. You got to remember, this company had dog shit earnings and a dog shit outlook. And the fact that this stock is clearly above its bottom, to me, this stock's already hit its bottom this year. I think Micron and I think Intel are the two examples. I also think there's a good chance AMD has too. We're not going to find out till tomorrow. I want to see if AMD specifically guides down on their PC segment. Do they get the Intel style love where they go up 10% the next day? If you think the PC market is shit, cautionary note, do not play puts on AMD. You got to be cognizant of what happened to both Micron and what happened to Intel with semiconductors. Semiconductors bottom on bad news. Just a cautionary note. The best play last week I made was not playing Intel because I knew their quarter would be dog shit. By the way, they impressed me with how much more dog shit it was than I was expecting, and yet, Although there was some Taiwanese chip producer who basically said they saw the PC market correction ending quicker than expected. They basically saw for 2023 PC shipments flat over 2022. And 2022 was going to be basically down 20% from the prior year. The prior year was like a record year. If that's the case, that is entirely much more optimistic than I would have been. In 3 months, we may see larger macro effects and data center demand slowdown. It'll be interesting to see. I'm waiting for any kind of signs of data center weakness. To me, the first sign of data center weakness will show up in mega cap earnings when they talk about cutting capex. We just went through that last week, and none of them cut capex, at least on the data center side. In fact, part of why Facebook got the shit knocked out of them, they upped their spend. Yeah, it wasn't just their R&D, it was their CapEx also, where they're basically throwing all sorts of money at specifically NVIDIA and AMD. And Marvell. And Arista. DLR stupid strong? Yeah. Yes, Wolfspeed did. I'll probably cover it more in detail tomorrow. I followed as best as I can tomorrow. By the way, I sold out of my DLR position. I took like a 20% loss. It was a small position, but I was like, fuck it. I'm not waiting for them to truly tank. If data center slows down, are AMD, Nvidia shares fucked? I don't know. Whiskey Jack Black, I had puts on DLR also. Because DLR is about to get their asses kicked. Financially, DLR is not in a good spot. Why, Jay? Because it's a shitco. Their forward PE is 80 right now. Wolfspeed I don't like half as much as onsemi. Problem with Wolfspeed is you're basically investing in so much future growth, and they have to like hit it out of the park on all of it. Meanwhile, onsemi is going to be in a position to basically do buybacks or a dividend a lot quicker. I can't elaborate on why it's dog shit. I'll say find Diogenes on Twitter, Jim Chanos' account, which I've posted several times. He has a really good case. It's his play. He is short both DLR and EQIX. He hates them. He hates them. Mobile Horse. AMD to tank after earnings or stock already beat up too much? I think their stock's already beaten up too much. I covered them earlier. Basically, all the mega caps, none of them seems to cut their data center spend. In fact, Facebook increased it. Intel guided down their data center segment and lost money this quarter in that segment. AMD is already pre-released, and data center came in exactly as expected. Plus, AMD has their new product being released this quarter. I anticipate the guide for AMD on data center is going to be very strong. Data center, even if it was flat, which it's not, even if it was flat, AMD has a lot of room to steal market share from Intel. And I think the fact that it's growing and they have even more outperformance. Let me pull up Diogenes' account. So here we go. It's Wall Street Cynic. This is the Twitter account of Jim Chanos. He has a short position. He talks about it a lot. So you'll be able to see it. But yeah, REITs are valued differently, but he does call it out. Okay, let's talk about onsemi for a second. Eric Jones finally coming out with the piece. I read part of this earlier, by the way. Someone else had posted specific the LTA, the long-term supply agreements, but this is from their earnings call, which I still have to review the full call tonight. Defining our primary areas of focus has enabled us to double down on intelligent power and sensing technologies and lead where we bring differentiation to the automotive and industrial markets. Our customers now choose onsemi as a strategic partner to enable their success in emerging and disruptive areas such as electric vehicles, advanced driver assistance systems, energy infrastructure, and factory automation. Customers are entering new agreements with us, while others are expanding the scope and duration of their existing long-term supply agreements to secure even longer supply. Revenue committed through our long-term service agreements or supply agreements increased $5.3 billion in the third quarter and now totals $14.1 billion, with LTS revenue over multiple years and often includes hundreds of parts. As Hassan mentioned, we also made additional structural changes to improve the sustainability of margins by rationalizing our product portfolio and eliminating our exposure to price-sensitive, non-differentiated markets. Basically, they're giving up revenue to get rid of shitty margin stuff. They don't want to make cheap shit. So far, we have walked away from $277 million of revenue at an average gross margin of 25%. $39 million of this revenue was in the third quarter at gross margins of 35%. We continue to execute our fab lighter strategy through the rationalization of our manufacturing footprint. Following the sale of Belgium and South Portland fabs in the first half of the year, we closed the sale of our 8-inch fab in Pocatello, Idaho in October, and we also entered into a definitive agreement to sell our 6-inch fab in Nagata, Japan. We expect the Nagata transaction to close in the fourth quarter. Exiting these 4 fabs will reduce our annual fixed cost by $160 million, exceeding our target of $125 to $150 million. The full benefit of these divestitures will be realized over the next several years as we transition production to other fabs in our network, further supporting our long-term gross margin expansion plans. Our intelligent power revenues grew by 35% year over year and 6% quarter over quarter, driven by the accelerating momentum in EVs and alternative energy. In these markets, customers are increasingly relying on us to enable their long-term product roadmaps with the market-leading efficiency of our solutions and our end-to-end supply chain capabilities. Our progress to our silicon carbide leadership is accelerating. As compared to our exit rate in Q4 of 2021, we tripled our silicon carbide revenue in the third quarter and continue to install capacity across the entire supply chain. We just passed the 1-year mark since acquiring GTAT, which, by the way, is a maker of the silicon carbide boules. They own their own production capability. It's only them, and my understanding, Wolfspeed, who does that. And we remain on track to expand our growth capacity by 5x year over year exiting 2022. We have also increased silicon carbide wafer fab starts by 3 times this year to keep up with our full output, a number which we plan to double again next year. We remain on track to triple our silicon carbide revenue in 2022 and deliver $1 billion of revenue in 2023 based on committed revenue from LTSAs, long-term supply agreements. Hold on, Fig, let me check this. He saw news he didn't like. If you know, you know, out of all longs and started short equities. Uh-oh. I assume it's the Treasury funding news. I don't know. I don't know what to think. That's not a good thing to read. I'll say that much. What do we think about ASML? Extremely strong company. I don't know how you value them, given they are a monopoly. Jesus Christ. Congrats to anyone who bought the dip, by the way. Yeah, Fig. I assume Andy's talking about the Treasury. Listen, Andy's been playing exceptionally well these last few weeks. I'd be cautious. I would be cautious. My cash balance is currently 33%, which is a little more than that, about 38%. And most of my positions are shares right now in onsemi, which I'm okay. If I have to bag hold, I'm okay. So I'm not going to make any rash moves, but I do want to be cognizant of what he just said. By the way, the cool thing about Andy is Andy's very transparent. He's also transparent when he's wrong. He doesn't run from it. He doesn't hide from it. He doesn't delete shit. That's why I like him. Wendy said you can't just increase treasury issuance by 50%. Liquidity is going to go to shit. What? Play with me on this one, Wendy. Does Treasury also have the capability to buy back their own bonds, i.e. they issue and they buy at the same time? Don't they have that ability? Does this set this up? And Thig, don't forget, few understand this. Steely, you saw someone say the increased Treasury issuance could be used to fund a buyback? Yeah, what's going on here? Let's do the twist. For those of you who don't know what a twist is they buy and sell bonds at different points in the yield curve, different maturities. So if they basically wanted to steepen the yield curve, i.e. have higher yields at longer maturities, then they would basically sell those but buy ones at the shorter end. About 2.5 million in 250-hour puts on Home Depot today. Interesting. Interesting. Yeah, you should definitely be a little bit cautious if you're a bullish at the very minimum. I don't understand it enough, so I'm not panicking yet, guys. But you're not going to see me adding. I was already not going to add substantial longs before FOMC, but be cautious. Okay, Andy's one of the few people on FinTwit where if he says that, I'm gonna listen because he's played the last 3 weeks. He's probably been one of the best on FinTwit. The good news is if Andy jumps back in a long position, say tomorrow, he'll tell you. I trust him in that regard. On IWM. Before the end of the day, I will sell out of my intraday IWM position. I'm currently down 3%. So, Wendy, what's the concern here? Is it just simply the liquidity aspect, or is it the messaging aspect, i.e., the messaging that Treasury is basically seeking to increase the Fed balance sheet? What are we thinking here? I assume it's a pure liquidity, like you mentioned the first time. I don't think anyone's sitting there and saying, because essentially, like, if the government's going to spend it, they're going to do it through legislation. That would have already been priced in, right? Like, what new has happened? I'm assuming it's purely liquidity, right? What are your thoughts? Yeah, for my favorite zero hedge. Ugh. Someone asked earlier, what are my thoughts about all the anti NATO protests happening in Europe? And I say, I don't give a fuck. I don't know. A lot of stuff that gets reported in the news may not necessarily be truly representative. So, yeah. If you thought the 10-year going from 3.5 to 4.25 real quick was a risk, we just got another potential catalyst for yields to moon. Is it that damaging? Windy, let's think. Last quarter, we know, apparently it came out today, was the Treasury essentially overissued. And we saw, at least in the most recent time period, yields drop. Can the market really not absorb an extra hundred, so billion, whatever the number was? I don't know. I'm cautious though. Anything that increases the supply or decreases the demand of treasuries or fixed income in general, you have to treat as bearish. Yeah, Garfa, good point. Why buy if you know they're about to dump 150 billion extra on the market? My question is, they know that. Like, yeah, why absorb they get a better price? That makes sense. But like, it's strange. Why would they? Yeah, I don't know. All right, boom. I just sold for a $70 loss on my IWM. Was not going to hold that one. I am going to hold my AMD. Yet, Kemla, it feels like Webmaster's been on the soapbox for a while. There are no natural buyers of the long end who can possibly entertain the idea of a 30-year here with short duration yields. 100% agree on that one. 100% agree. Steely, you have a hard time believing Yellen isn't aware of the implications? There has to be a reason to think. Yeah, that's what's strange to me. Like, what the fuck is she thinking? Windmaster's correct. We've also learned Yellen is completely incompetent. Is she that incompetent, though? Because, come on, this seems a little bit off in terms of timing. That's what I would say. Sunak signs off on tax raises across the horde. Yeah, they had to. He's going to eat shit for it. It's the right move. It's the right move. No one likes it. I know. It's the right move. Treasury has to fund the government. They got no other choice. Whoa, IDM just really died. Good thing I jumped out. 2.5 billion to sell. Ooh. No, 3 billion on the sell side. Wow. Hold your butts, guys. Shit's about to get cheaper. A long covering rally. Could be true. People jumping the fuck out. So, earnings tonight. Stryker, famous short report against that. Aflac, I'm assuming insurance actually gets smacked around by inflation. Yeah, liquidity, we saw that. Yeah. I'm not going to pull up Zero Hedge if I can avoid it. Arista, any interesting options activity on Arista? ANET. Don't apologize, liquidity. You fine. Boy, you fine. You don't got to worry about shit. You did okay. Any interesting options activity on Arista Networks? Sophie, yeah. What's the ticker? ANET. Yep, Lil H, I saw it. Been monitoring ANET all day. Not really. Interesting. ANET should be really interesting in terms of their guide. For those who don't know, Arista Networks makes both software and network switches. They're very big in data center. Very big in data center. The news from Facebook should be positive to them. Yeah, not a lot of OI here. Yeah, there's really not a lot. Put to call ratio is 1.5. Oof. That's interesting. But look at them at a daily standpoint. This company has not been bludgeoned like a lot of others. They already got that bump from Meta. Agreed. I'm avoiding this one. Sophie, puts being sold, calls being bought. Is it Sophie's time to shine? Listen, oh my god, this stock's a dead fucking body. Ugh. On semi keeps dropping. Bitches. Yeah, they do. Ugh. It's gross. DraftKings puts being bought. Interesting. Yeah. Goodyear should probably be shitty. Avis, I have no clue how to play. NXP, any interesting things on NXPI? Yeah, the ticker is NXPI. Here we go. QRA resulted in 300 billion new bond issuance over prior announced expectations. Imagine that QT just got 2 times larger. Here's the interesting one. Someone responds, I don't know who the fuck this person is. Bullish, the pivot comes earlier. And yes, the Fed does indeed care about treasury market liquidity. Not bearish at all in your view. I actually understand what this person's saying. First of all, I'm not smart enough. My viewpoint should not go up there with Andy Constans, former Bridgewater CIO. Fuck that. He has forgotten more shit than I will ever know in my lifetime, and that is a compliment to him. That being said, I'm with Steely Hands on this one. Like, and this person points out the Fed does indeed care about treasury market liquidity, which again is why we think, what are they doing here? I cannot assume they're all fully stupid. Even if we think Yellen is a bit on the special side, we can't be thinking they're so stupid. Not only that, the people around them. Someone has to point out, essentially, if you're doubling QT from a liquidity standpoint, and if you guys were, if my tinfoil hat was correct, the first Timmy Leaks article came out in response to treasury markets unsettling. Why? Turkey McNugget, something breaking behind the scenes? This would be breaking things behind the scenes. This potentially does more damage. This is increasing the amount of treasuries without a commensurate amount of buyers. This pushes yields up. This undoes a good portion of the work, essentially, the Timmy Leaks did. Rivian just ate a veiny cock. I hate to see it. Yeah, on semi is almost certainly getting fucked right now. That's fine. Ouch. What if J Powell wants to tell Volcker, hold my beer? I don't think breaking the bond market does that. Like, if you want to tell Volcker, he'll just fucking raise rates. It's weird. I don't know what to think. I'm not smart enough. I'm with Steely on this one. I'm not with Steely so much I'm going to fade Andy Constant. Fuck no. But I wonder behind the scenes what's up here. There has... at face value, basically, the Treasury is increasing quantitative tightening. I don't know. On AMD, just stay above 60. That's all. That's what I'm rooting for. Yep, Treasury and Fed only have hammers, not surgical tools. This one just seems strange, though, to pull out. Someone posted, Apple Mac computer sales revenue shrinking in low demand climate. Q3 was down 29% year over year, down 10% year over year. Combined was down 11%. Someone goes, wait, Dylan, was it you that pointed Apple was the only one not impacted? Dude doesn't understand calendar years versus financial years. Apple will be down year over year next quarter, but this quarter they were 14.5% share. Yeah, I think that guy was being a bit dumb. All right, guys. Ting, ding, 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 ding. Let's see how the SPY did. I assume the Bears won this one. Not as far away as it could have been, but the Bears won. The Bears won. The Bears won. Let me give you your points. We ended under. Ooh, there was a lot of people who bet power. I am sorry, my friends. All right, guys, keep your eye in terms of earnings. I actually do want to see how Stryker and Arista do in particular. I think NXP is not for a little bit, but we'll see. So keep your eyes on any earnings that come through. We'll evaluate them before we end the stream. That's what you get for having faith. Oh, don't worry. It's always everyone's turn to get. Everyone always gets a turn being bent over the barrel. Today was your turn. Arista, I don't know if it was fully priced in on Facebook and Facebook's news, and they've not been beaten up that much. I would have normally played calls on Arista. I wasn't going to touch it in this circumstance. So I wanted to see how they do. Stryker, I would have gone puts. SYK? Yeah, SYK is Stryker. Yep, Jay wearing black for Halloween. I always wear black. Only on here, you guys. Ooh, NXP came out actually pretty early. If on gets shit on, if on semi gets shit on, NXP should definitely get shit on. They're not moving that much yet, so let's see if we find. Yeah. No one's even covering their earnings. Not at. So. No one even talking about NXPI. Oh, that's disrespectful. Europeans, y'all get no love. So the estimate was 332. I think revenue looks like 3.45 billion. Yep, this doesn't look that good. Let's see. Oh, I forgot. Oh, this company of yeah, worst investor relations team in the world, by the way. Yep, Caffeine's pointing out the sales. NXP is a European company. They don't do GAAP or non-GAAP EPS. It's always up for the other analysts to do it. They do not submit it. They only do IFR or IFS, whatever it's called, International Financial. It's the most annoying thing in the world. You're going to have to wait to see what their actual EPS is. And the fact that they do this, knowing that's the case, is one of the reasons I will shit on European stocks. This company does not deserve investment from Americans. If you're not going to put the effort to do the calculation, you're just creating the means for someone else to get it wrong. ANET upsides? Ooh. Yeah, IFRS are annoying. Avis beat. Whoa. Is that EPS number correct, Caffeine? That's a big beat. So yeah, here is NXP. The last two times I followed them, I forgot they're the company from Europe who does not do EPS. That's a huge beat on Avis. Oh, it's car. I assume they're getting love. A little bit. Good for them. See, ANET. Holy shit, up 5. Yeah, revenue is pretty close. But when I see the commentary, here's they're saying NXP delivered quarterly revenue of $3.45 billion, an increase of 20% year on year and above the midpoint of our guidance range. Overall, in the third quarter, we performed very well. However, we were impacted by the weakening macro environment in our consumer exposed IoT business. At the same time, demand in both the automotive and industrial markets continues to be resilient, driven by secular and company specific drivers, along with incrementally improved supply. Looking ahead, while we continue to be supply constrained, we are cautious in the intermediate term due to uncertainties in the macro environment. That does not sound positive. That does not sound positive. Oh, and they guided down. Q4 revenues 3.2 to 3.4 billion. The estimate was 3.41 billion. See, now NXP could potentially get fucked. The EPS number being reported is $2.79, which is below apparently what they're supposed to do. But since they don't provide the numbers, if whoever provided it to TD Ameritrade's wrong, they get to fucking eat shit on it. Jesus, caffeine. That is a ridiculous beat. Good. Good for Avis. Yeah, where is Arista's numbers? Arista's is the one I really want to see. Are Arista's numbers even out? I see the stock up. I don't see numbers for them, though. Give more caffeine. Yeah, to reiterate, if hotels are doing well, why wouldn't rentals? That's a good point. There's a semiconductor company called Lattice. Lattice Semiconductor sees Q4 revenue of 170 to 180 million. Estimates were 169.5. EPS 48 cents beats 44 cents. Sales 172.5 beats 166 million. Beat, raise. Chat, I don't know if you can draw a direct line from Avis to Airbnb. I don't know. Maybe hotels are bringing back customers for Airbnb. Could be. Amcor is up. AMKR. Yep. Semiconductor testing and packaging. I forget what end they play on. Wendy pointing out, big beats are unfortunately barely being rewarded. Complete IV crush. Yeah. Yep, I'm waiting to see the actual numbers for Amcor, but they seem to describe it positively. They're not really moving in after hours. Not anymore. They bounced around a bit. I want to see Arista's guide. Arista's guide will be important for semiconductors. Arista basically only plays in data center. So you might be able to use this as a bit of a look ahead into AMD. That's why I'm particularly interested in Arista. Oh man, they crushed. They crushed on this quarter. What's their guide? Aflac missed on EPS, but beat on sales. They're down. Not much. They actually didn't get that punished. Stryker misses. EPS missed. And they're down 4%. Iranian save and silver too. Like, no clue. Are we going to get any kind of guide out of Arista? And going back to NXP, I assume they're not going to do well. It looks, I mean, they clearly guided down. Yeah. They're down 5%. Ironically, NXP versus onsemi should show the strength of onsemi. The fact that onsemi doesn't have the same exposure that NXP does. I think NXP makes for the iPhone and other, like what NFC, near field communications. I think they specifically make that chip, but not just for the iPhone, for a lot of phones. Either way, a European company appealing to American investors who doesn't put EPS, that's a hard no for me. Time for onsemi to be punished twice. I still think onsemi is going to rebound. Maybe not tomorrow. If what happened last time, if people read through, I think they're going to see a lot of good. But we'll see. I am biased, so. Bring back Avis 300. Avis crushed. They're up 4.4%, by the way. Good for them. But they're bouncing around a lot now. Oh, Consensus Gurus is back. I forgot. This makes me so happy. Yep. So NXP basically missed on industrial and IoT. How the fuck you doing that? It's because they had a lot more consumer facing industrial IoT. And then their guide, miss on revenues, miss on profits, miss on operating income. Small. Yeah, on semi, you basically miss by 0.65 on gross margin, 1% on revenues. NXP missed on revenues 3.5% and missed on gross margin, actually a little bit less than on semi did. Can you see Hilton? Sure thing. HL. Oh, HLIT. Oh, Harmonic. What the fuck? Yeah, Harmonic. Beat. What do they do? Video delivery software. Okay, interesting. Never heard of them. Yeah, apparently it doesn't look like they did bad. They're not getting a lot of love for it. If analysts were really good, would companies never beat or miss? In the perfect analyst situation, yes. Yes. Gaseous Clay, you think semi companies with broad industrial exposure are missing and issuing downbeat guides, NXP and Texas Instruments so far? Yes, I would agree with that. Basically, if you have exposure to the consumer or the PC end markets, you are at much greater risk. That's what I think's happening. Hey, Jetski, how you doing? SPY completely offset by the Dixie today. Sounds about right. Yep. So I don't think there's that many of the companies we kind of give a shit about. Yeah, NXP is now getting punished. They're down 5.7%. And I quite frankly, just the fact they didn't issue it in EPS, I mean, send them straight to hell. My hawkish regarding Fed comments tomorrow or dovish. I assume you mean Wednesday. And we'll see. I don't know how to play it. I don't know how to play it yet. Gaseous Clay, data center, bandwidth connectivity, etc. companies will hold up stronger. Who have we had so far behind Arista? I think Arista, you had the mega caps. The mega caps already reported, and from a what's it called? Getting my camera back. From a capex standpoint, they are all still strong in terms of capex. So I'm assuming data center is going to hold up for at least another quarter. Lawbad, I haven't seen ANET's Arista's guide. The fact that they crushed, I assume, is good. AMD's already basically pre-reported. So we already know from a data center standpoint, AMD did just fine this quarter. The question is, what's the future? And I'm going to assume data center holds up for at least another quarter. Industrial IoT starting to lag is interesting. Yeah, I did see that. Corning, GLW, reported strong growth in their optical segment, fiber for data centers. Yep. All right, folks, let's go ahead and see what our good friend Jay Jared is up to. We'll call it a stream there. All right, folks, thank you very much for tuning in, and I will catch you all tomorrow. She has the spicy earnings in the morning to talk about. Anyway, peace, guys.